What is going on, everybody? And welcome to the All Access show here today. I'll be your host, Zunaid Suleiman, and we've got a great lineup of companies to talk about. We're going to talk about the fundamentals. We're going to try to figure out how the company looks and try to make sure we can make the best educated decision when it comes to investing in them. But before we get things started, I do want to have you just slightly, you don't have to be aggressive about it. Go ahead and gently hit the like button and make sure you subscribe as well. It definitely helps us out, brings more companies to you, and we can have those conversations. And of course, if you ever have any questions, you can absolutely go ahead and tell us in the chat, and I'll do my best to get those questions in. Now, next step here, we are going to go ahead and do a giveaway for $150 at the end of today's show. So just make sure you fill out the form in the link, or excuse me, in the description, and we'll announce a randomly selected winner at the end of today's show. Now, I want to be very clear because we want to be very transparent about this. All Access is one of the ways that Benzinga monetizes our YouTube channel. Every company appearing on today's show has paid Benzinga to be here. We are upfront about this fact. We want to let you know from the get-go. However, what they don't know is what we're going to be asking them. They may not know what we're going to talk about, and they do know that they can expect conversations and questions from the chat. So make sure you drop your questions in there. And again, I'll do my best to go ahead and take care of that. And of course, All Access is sponsored by Ticker.
What is Ticker? That's right, Ticker with two I's, just like you. Because it's for you, for investing, for stock perks, for connecting you to public companies who reward you as a shareholder, as a brand lover. That's why people can't stop tickering. Ticker, where investors discover shareholder perks and consumers become investors in the brands they love. Ticker. Start tickering today.
And if you want perks for owning stocks, Ticker has revolutionized how everyday investors are rewarded for brand loyalty by connecting consumers with perks for their own brands that they own. And see what perks you qualify for today by going to ticker.com/Benzinga. That's TIICKER.com/Benzinga. Or make your life easy and click on the link that's going to be in the chat and in the description below as well. Benzinga All Access listeners, make sure you please visit ticker.com/Benzinga, where you can register for a Ticker account, connect your brokerage account, and also receive $20 in Amazon gift card once your account has been connected for 30 days. I saw someone in the chat ask me if I'm wearing a tie. Yes, believe it or not, they told me I couldn't come on and dress how I normally do. So I made sure to get myself a tie on here as well. But again, we've got a great lineup of guests coming on here just in a moment. Make sure you go ahead and ask us any questions in the chat as well. And of course, without any further delay, I'd love to welcome on the show Dr. Michael Lebby, who is the CEO of Lightwave Logic, ticker LWLG. Dr. Lebby, how's it going?
Great. Good to see you this morning.
It's good to see you, and thank you again for being here. How's it going? How's your morning been?
It's still pretty early, but going great. Weather's great. I'm really excited to be back on the show again. It's been a little bit of time.
You're not on the west side, right? It's not like 6 o'clock for you or anything.
No, I'm on the west side, but today I'm on the east side. I'm staying with family in DC, so the timing is a lot later in the morning.
Love it, love it. Well, hey, let's go ahead and kind of kick things off. And one thing I love to do is kind of pretend like my niece or nephew are watching, right? Pretend like, hey, explain it to us like we're 5. What is it that your company does?
So what we do at Lightwave Logic is we help the internet go faster. We have developed a unique technology platform to do that. So let me unpack that a little bit. So what are the problems you have when the internet doesn't go as fast? Well, you know as well as I, through the pandemic, we had to turn our cameras off. Too many people using video platforms, and we're not getting enough bandwidth into the home. Why are we getting enough bandwidth into the home? Is because there's not enough data being sent fast enough through the internet. So what we do is we make devices that help the internet go faster. Now, the technical name for these devices is called a modulator. So if you just look at my hands for a second, if you just assume my hand is a laser diode and it's sending out light down the internet, and the internet is composed of fiber optic cables. These are cables made of glass. And so light goes down into the internet, and modulators just actually encode the light. So if you can just imagine light is going through the fiber, it's a 1, and then you stop the light, then it's a 0. And that's the way you encode the digital data. Now, today's technology does this, but our technology does that. Well, I can't do it much faster, but it
Yeah,
actually
yeah.
goes much faster. And so our technology is polymer based, it's much faster than semiconductors, and that's what we do.
Got it. Now it's interesting you mentioned because your website does talk about COVID-19 increasing the need for what it is that your company does. But let's talk about how now that the pandemic has kind of moved forward and we're slowly getting back to normal, if you will, how has it impacted your business today compared to 2020?
So we haven't seen any major impact in our business from the pandemic. Certainly, we've seen a lot more excitement about sending technology faster through the internet. But for example, we're based in Colorado, and we develop our polymers, the chemistry of the polymers in Colorado. So we haven't suffered any supply issues because we source domestic materials, raw materials, and we compose and create our own polymers in Colorado. So we haven't been waiting for ships to cross oceans and things like that. So our impact, uh, we haven't seen a lot of negative impact through the pandemic on that side of things, which is actually good to report.
Love it. Now let's kind of talk about your current focus, which is in my opinion, it's just the datacom and telecommunications hardware supply chain, right? You just talked about how that hasn't been interfered with as much or at all. Now, is this a long-term point of concentration for you, or are you planning on possibly branching into other areas as well?
Yes. So today's real exciting markets are telecom and datacom. These are areas, these are markets that are growing really fast. These are markets that use modulators to encode signals going on the fiber optic internet. And so this is a market that is present today and it's really exciting. So if you look out some of the projections over the next 10 years, it's incredible. Now, to really address your question, we're not exactly a huge company right now. We're a small company. We're focused on the fiber optic communications, and that includes datacom, data centers, telecom, things like that, high performance computing. But as you can just imagine, if you could switch light quickly, much faster than liquid crystal displays that you've seen in displays and things like that in the past. Then there's other applications that include things like displays, automotive, and LiDAR, things where light is being used to send signals. And if you can send signals and encode them faster, then that becomes really exciting. And I would say that we've had a lot of interest from other market verticals, but we have to focus. We have to really nail our technology into the internet environment first. And then you'll see a lot of sort of bridging out into other market opportunities. And that may be through our business model of licensing and tech transfer.
Now let's talk about, you talked about the future of the company, but let's go a little bit in the past. And you had a conference that you took part in. I believe it was the sixth PIC International Conference in Belgium. Exciting location there. But was there anything significant that came out of that conference that our viewers should know about, just in case they missed that one?
Yeah, absolutely. This was a conference. Now, I need to explain what a PIC is because you said it's a PIC conference. That stands for a photonic integrated circuit. And so, what's a photonic integrated circuit? It's sort of similar to the integrated circuit you get in the microprocessors, where you have lots and lots of transistors all stuffed onto a piece of silicon chip. A photonic integrated circuit has lots and lots of photonic functions, photonic devices, such as modulators, all on the same chip. So you're increasing the density and increasing the functionality of all these chips. Now at the conference, what was really exciting was there was standing room only. There was people from all over the world. And post-pandemic, that's sort of exciting to go face to face with folks again, rather than doing the videos. I know it's great being on the video this morning, but face to face is always brilliant.
Absolutely.
And the big thing to come out of the conference is that there was an accepted need by the technologists and the customers that high speed, low power modulators, the things that we are designing, is going to be absolutely critical for the internet as we move forward over the next decade. And we certainly have one of the most exciting technologies on the market. So that is really sort of an exciting take back from the conference, if you like, that I saw when I was there.
Now let's kind of pivot back to the future. You've got good amount of events, I believe, coming up here as well. What can our investors or any of our viewers expect from that event that they may not have gotten information from at the Belgium event?
So if you look at what we've done over the last year in terms of, press releases and sort of guidelines, I mean, we're pretty regular in our guidelines to the public and giving folks updates. We have a great shareholder base, a retail shareholder base that's really sort of loyal and quite technical too. And so they all send me lots of questions. But in terms of really answering your question, it's the foundry side of things. Now we have a small, if you like, prototype foundry in Colorado. It's about 1,500 square feet. And if you compare that to silicon foundries, across the globe, I mean, it's tiny. And so in order to get mass commercialization scale or volume scale, you want to be able to port your technology to the big foundries so they can run it in volume. And that's certainly what we've given guidance on in the last year. And that's certainly something that we have been talking about. And we're really excited to engage in a whole number of foundries to do that. So as things progress on that side of things, you're going to see PRs, you're going to see updates. And those are really good metrics to see how well we're doing in terms of progressing to have this technology become ubiquitous across the globe.
Got it. And now let's talk about something more exciting, and that's going to be that you have you're joining, I believe, the Russell 3000 Index in June. I believe that's what the development was. What does that mean for the company, and why is it such a big deal?
Well, I think at the very highest level, um, just going to the Nasdaq from the OTC last September was really exciting. But what that actually does is it means that we have a technology that's unique. We have a technology that we want to be ubiquitous, just like polymers for OLEDs, organic LEDs. You're probably watching an OLED screen today. So we want our technology to be just as ubiquitous. But going to the Nasdaq and the Russell, I mean, that gives us the resources to really fund this company to really get to where we need to be. And so we have the resources in place. And that means that, the unparalleled progress we've made in the last year with the unique technology and the drive to be ubiquitous. I mean, we have all the pieces of pie in place. It's really quite exciting.
Yeah, it definitely is. But getting involved in an index, it's always great. It means you're being recognized for the fundamentals and how great the future may look for your company. But let's go ahead and kind of talk about, I believe it was at the Investors Daily article a couple of days ago. You mentioned your jump in relative strength rating to 93. If you could give me a quick snippet of what that means and what do you think the reason is for that climb as well?
I think folks are recognizing that the Achilles heel of the internet is being able to send data at a higher speed. And if you talk to a lot of the folks at the data center environments, I mean, they really have an issue trying to bring their power consumption down. And so we have a technology that I guess Mother Nature really works with us. It's very low power, it's very high speed. Yes, it's not semiconductor based, it's polymer based. It's similar to, the OLED technology. We switch light, OLED sends out light. And so it's a recognition, I think, that we are aligning the company to really address these problems in a grand scale. And I think that's really exciting.
Got it. And let's talk about then, let's kind of zoom out, right? We talked about COVID and how that kind of helped accelerate growth. And I know right now you said it hasn't impacted your business since we've quote unquote gotten back to normal a bit here. But do you see any other growth factors at the horizon as well? And I'm kind of thinking, you tell me if this doesn't play an impact, but I'm kind of thinking of kind of like the NFT space and the need for networks there. I'm kind of thinking of terms of like Web3, but is that going to help fuel the growth of Lightwave, or are there any other factors that I'm not even thinking about that you believe will really accelerate the opportunities for Lightwave to go to that next level?
Oh, and there's no question the fiber optic communications that are the sort of the architecture, the three-way system for the internet is going to fuel Lightwave, and we're really focusing there. But as indicated earlier, there are other market verticals that are going to be really, really exciting. Display-based, automotive LiDAR-based. I mean, we all know everybody's talking about LiDARs on cars. And so, that's an optical solution. You've got 3D sensing that mobile phones have. And so what's going to happen if you can get the distances more than sort of a foot from your face, and you want to go sort of 10 meters or 20 meters or 30 meters, you're actually sending light beams out and you're encoding light beams. I see a huge opportunity here in different market verticals, in addition to what we're focused on right now. So yeah, this is exciting times. I mean, it's great.
Yeah, it definitely should be fun. I know my nieces and nephews, they're always showing me different technologies that they're kind of playing with. And it's just incredible how fast technology grows and the need for different, whether it's, fiber optic speed, different things like that to kind of contain those technologies as well. But I've never met a company that doesn't have any competitors, right? So let's kind of talk about the competitors that you may have, but not about the competitors necessarily, but what advantage is it that you believe Lightwave has? Or am I wrong? And is Lightwave truly a pioneer in this space here?
So, from a competitor standpoint, I mean, the incumbent technologies that are on the internet today that are called modulators are semiconductor based. And I've been a semiconductor person all my life. I also have worked in polymers too. But the semiconductors are reaching their saturation point in terms of performance. So I look at that as a sunset type technology. I mean, they can't go much faster. They're struggling to keep the power consumption down. And this is like the perfect entry for a new technology that actually addresses those issues. And when I say Mother Nature works with us, our polymer modulators are at least 3-4 times as fast. I mean, they're about 10x lower in power consumption. And so when you start looking at some of these metrics, and the customer base is realizing this, these are big issues they have to deal with. We're sitting on a great technology that's going to, I call it a sunrise technology. I mean, we really are not, we don't have just the technology solution for the next generation or the generation after that, but we have technology solution for the next decade or even 2 decades. That's what's really exciting here. It's not just we have one solution for the next generation and then semiconductors are going to come back. I just don't see that happening at all anymore.
Yeah, and that's why it's so important to kind of be able to pivot with the verticals that you spoke about and whatever else the company may be planning that we're not privy to just yet. Because, like we've already talked about it, technology changes, trends change, and Mother Nature or anything else. You have to be ready for the unexpected, or expect the unexpected, I guess is a better way to say it. But the recently signed $1.2 trillion infrastructure bill last year, how does that impact you, whether positively, negatively, or kind of no impact at all? Or do you see kind of continued growth in that space?
I mean, I do see growth in that space because the infrastructure needs to be upgraded, there's no question. And there's many opportunities where you would need to switch light. It doesn't have to be just in the internet environment. It doesn't have to be in fiber optic communications. I mean, some of the slides I put up on the website show that there's other market verticals that are really, really interesting. And we had, actually, to tell you the truth, we haven't explored all of those yet. I mean,
Okay.
we have people calling us and going, well, we'd really like to see your technology work in our environment. And so that's why our business model is flexible enough that, we can license and tech transfer to other market verticals because, to actually to address all these markets in parallel means you have to be a super big company. And we're not a big company yet. And so we want to be able to address these opportunities in a way that we can keep our size and our cost structure and our burn rate under control as we grow. And that's really, that's an exciting part of the business side of what we're doing. Yes, we're focused on fiber optic communications, but we see these other opportunities that are part of the infrastructure fund being really important, and we don't want to miss them either.
Now, there are a few questions that I like to ask everyone that I have a conversation with, right? Being misunderstood is a part of life. Doesn't matter if as an individual, as a company, as whatever. What is something that you believe investors, possible investors, misunderstand when it comes to Lightwave?
Well, I do get questions like, well, is your technology the same polymers as an OLED display? If you think about an OLED display, and we all look at them, right, every day,
Yeah.
those are displays that are polymer based, right? Our polymers, from a chemistry standpoint, are actually different than the polymers in an OLED display. In an OLED display, I mean, the OLEDs push out red, green, and blue, right? So they can get your color displays. I mean, our polymers actually work differently. So we have chemists in Colorado that, really work the formulation of these chemistry materials and really work the performance. So they switched light at really low power really quickly. And, it's something that comes up a lot. But, I think it's easy to comprehend. If now we see OLEDs everywhere, what does that tell us? That tells us that OLEDs are reliable, they give good color. I mean, quite honestly, when I worked on OLEDs in the 1990s, when I was doing research at Motorola in Phoenix, I mean, we could get the blue to last 1 hour. We couldn't get any reliability. And quite honestly, I was like, I can't see this technology
Yeah,
going anywhere. But look at it today. We don't even question about that stuff. It's just so exciting.
absolutely.
So, and if you just apply that parallel to what we're doing, is it's like when I say our stuff's going to be ubiquitous, I really believe it.
Yeah, no, it makes perfect sense. Let's talk about the financial health. We've got about maybe 4 more minutes here, but if you briefly tell me about the financial health of the company, because we've got great things coming on the horizon, but nothing, there's no such thing as a free lunch. So, how's the financial health of the company?
Well, I think the financial health of us right now is really strong. We don't have any loans. We put a shelf in place, $100 million last year. I think on our last report, we indicated we used about 20 million of that. Um, we have a runway until 2023, and I think on our last report, I think we said it was like sort of low 20s in terms of cash in the bank. And so from that standpoint, we're very careful in terms of we're a conservative operation. We only hired the best people. We've got a number of job recs out right now. So the threshold to actually get into lightweight logic is really high. And so we actually pick world-class folks, and we really want that commercial background to support them. And so financially, I think we're in really solid shape as we move into 2023 and really progress our business plans and our technology. So from that standpoint, going from the OTC to the Nasdaq and then the Russell, I mean, it's put us in a really good position with the right level of resources to get the job done.
Now, when it comes to unlocking shareholder value, right? I know, sometimes I know a lot of times you don't like to talk about stock price, but that's not what I want to talk about. I want to talk about more so about any future catalysts that investors or potential investors can kind of look forward to on the horizon, whether it's by the end of the year or 2023. What is something you can look forward to?
Well, I always point to the foundries because the foundries are a big part of the plan going forward. And so you take your technology, you put it into a foundry. The foundry will have something they can offer their customers. The customer base that you see in the fiber optics, the internet space, are typically vertically integrated. And what that means is that they can do every part of their technology, from the chip to the chip package to the module going into the system going into the network. But these folks, they are techies there, and they really know what the weaknesses are. So you need to have a business model that's really flexible. So what do shareholders need to look for as we go forward? Well, clearly our press releases on our progress with the foundries, and our business progress as we move forward. And we will put out guidance as we feel comfortable working with partners and going forward as we progress the business. So yeah, that is going to happen, and we do a lot of guidance.
Yeah.
I've given a lot of guidance in the shareholder meeting just a month or so ago in terms of timelines. So yeah, we're just going to keep on that track.
Okay. Well, it's been a great conversation so far, but I do want to give you the floor. Was there anything that you wanted to let our viewers know? Any topics that you wanted me to discuss, but I didn't bring up? The floor is all yours here for the final minute.
Oh no, I think what I can sum up in terms of how exciting our technology platform is that we have had unparalleled progress over the last year. And we went from OTC to the Nasdaq and now to the Russell. Our technology is unique. I mean, it's polymer based, but it's unique. It switches light really fast, and it actually does things the whole internet infrastructure wants to see. And our goal is to have our technology become ubiquitous, just like OLEDs, organic LEDs you find in displays and mobile phones and televisions.
Yeah.
That's pretty much it. It's a great
Got
time.
it. Got it. Appreciate it. And that is Dr. Lebby, CEO of Lightwave Lightwave Logic, ticker LWLG. Thank you so much for having this conversation. Really appreciate it. I look forward to many more in the future.
Cheers.
Take care. Take care. And safe travels back to the West Coast. I've vacationed in the West Coast, and if you're trading markets, waking up at 6 o'clock to trade at 6:30 is not easy to do. But that's one company that we just had a conversation. We've got many more coming up, so let's not waste any time whatsoever. I do want to welcome Chuck, who is the chairman and CEO of Data Storage Corporation, ticker DTST. Chuck, how's it going?
It's going fine in Orlando, Florida. It feels like it's 110 degrees.
Oh, there you go. You're living the dream then. You're kind of vacationing. You're hopping on a call here and there. I mean, you've got it all right now.
Not really. I was in flight training for the flight training in the week, and I'm heading back to New York.
Okay.
Right after I hang up.
Gotcha. Well, let's kind of go dive into it so you don't miss your flight. Again, just like anyone in the chat may not know what it is that Data Storage Corporation does, if you could just give us a quick introduction of your company.
Sure. Data Storage Corporation operates with 3 subsidiaries, one flagship, which is a managed service provider, an IBM Gold partner focusing on the IBM community, whether that's software, hardware, cybersecurity, and today data analytics. DSC, which we've changed the name recently to Cloud First to more represent what they do, is focused on infrastructure as a service, DR, and cyber on IBM Power Systems, even though we offer other cloud services. That is a main focus of it. And we have Nexus, which is a VoIP and carrier services direct internet access provider.
Got it. Now, when we were kind of looking at your companies, something that kind of came to mind was disaster relief, right? Like 20 years ago, I don't think anyone would have thought that data analytics would kind of play a role in an area like that. Can you tell me a little bit more about what the role it is that y'all play when it comes to disaster reliefs and helping on that front?
Well, with cybersecurity, if they break in, which if they really want to, chances are they're going to get in no matter how much effort you put into it. But let's just say that they get in. You have to roll back to the day before, the week before. So with our disaster recovery services, the data is vaulted and it has a retention schedule based on the requirements of our clients. Our clients are typically middle or large size enterprise clients. Right. And then with that, they can go back to restore everything back to where they need to be. If they pull down the services, we have hot standby, cold standby servers. We can recover folks within 15 minutes to 24 hours according to the services. But you're actually going back to a point in time. And that's the key thing about disaster recovery type services. So if someone's on our infrastructure, let's just say, a mid-size enterprise size, and we're doing mirroring of their information. Yeah. Well, if the virus is on the production side, it's going to the target side. But our clients also have retention schedules on our storage. We operate out of 7 data centers, 5 in the United States, actually, and 2 in Canada. 6 of them all have IBM Power infrastructure, x86. But, with the IBM, there's very limited competition for what we focus on, and we've been doing it for a while.
Now, when it comes to competition, let's talk about yours. Kind of like the similar question I asked Dr. Lebby. Do you feel like what edge is it that you believe you have with your company at Data Storage Corporation that puts you at an advantage compared to your competitors in the same space?
Great question. First of all, there are limited competitors in the United States and globally, and there's a migration that's taking place right now. It's a very large market in the U.S. It's around $50 billion in annual recurring revenue. Just looking for a small piece of that. But I would say our technical expertise, we have the ability for any one of our distribution channel partners, as we call them, folks that potentially sold the equipment to the end user to begin with. And now the end user is saying, should I spend that capital or should I do pay as you grow, and go to an OpEx model? And the technical team is excellent. Any one of our channel partners can go onto our systems, configure systems, generate a quote, and deliver it over. So to their client. And so I would say it's the systems that we've customized and built allow us to be able to configure on the fly and allow the channel partner, plus along with the training that we do. So that's one of our main distribution points is that we have end user targets as well, mostly vertical, and that we have direct people that focus on that.
I've heard of pay as you go, but hearing pay as you grow, I like that much, much better. Let's kind of then talk about machine learning and AI. I mean, that's kind of been the conversation as far as I can remember, like 10 plus years ago, if not recent as well. Do you feel like, let's talk about the details of how machine learning and AI plays a role in your company and how you believe it'll kind of further accelerate revenue and growth for your company as well, looking into, let's say, 2025?
Data analytics is it's very much a consulting type of gig when you get that with a client. For example, today with professional fighting league, the fighters have chips in their gloves, the refs have cameras, and then with that, the information is gathered, put into your software, and you trying to become predictive to the next client. We have data analytics that we're doing for, let's say, Atlanta Falcons and pro fighting. I don't personally see how fast you can accelerate that, but we're looking at it, we're doing it. I know the migration on the IBM side is happening at a rapid rate.
Yeah.
We're there with limited competitors, and we know with seeing what's going on with our proposal log. So we are focused on some data analytics today, but we've spent millions of dollars having this particular product set in place. And x86 and Amazon and Google and Microsoft, they're really not focused in this area at all. So it's up for the grab. But it's the same thing with cybersecurity, not just the data analytics. Cybersecurity, we have a great tech team both throughout the country, basically, with Flagship, Nexus, and Cloud First DSC. But what happens is that the techs are trained in that area. Now the decision we need to make is, do we want to actually form a completely separate cybersecurity unit, pull some of those techs out and add to it? Those are some of the things we're looking at. We need to improve our gross profit margin because we do sell equipment. Flagship has some large equipment sales. We had that in the first quarter, but it's a one-time sale. You might wait 3 years to get the software renewal on it. What ends up happening then is that when you don't take that large cash in, if you want to call it from the sale, you end up having a smaller monthly recurring that goes on for 36 months, and our renewal rate's 94%. So it goes on and on and on. For our partner, they get a renewal, an annuity, and for us, so you don't take those big lumps. It's very lumpy with that. So when we look at data analytics, cybersecurity, infrastructure service, and DR, what's the fastest growing movement that goes on that when you advertise on Google AdWords, you're coming up on top? So we're looking at it. We're doing all of those things that we say, data analytics, cybersecurity, but there's something happening, and it's been happening in the market because they've moved their Windows and x86 systems to the cloud already. Now where are they going to go for their IBM systems that are custom developed applications? So for the most part, we're focused.
Apologies there for interrupting. Now, something interesting that you mentioned that I have to ask about is you mentioned that the Googles of the world are not necessarily in this space. Why do you think that is?
They might get into the space in the future. I'm not saying, but today they're not. It's a much larger audience, and there's many more MSPs out there globally that are focused on x86, Windows, and those applications and software that they buy. These systems are critical systems running critical apps. You need specialists that are in there. Now, could they hire everything? Can they deploy that equipment? There is a time to market on it, even for Google, Microsoft, and Amazon. So they hold around 51% of the market on the x86 side. I don't think they hold much of the market at all if one of them were to focus on it. And they may do it with partners, but we have a proposal log sitting between $12 and $14 million in total contract value. So we're sitting okay. We're doing good, but we are focused on all those other areas. But our main focus now is how do we get more monthly recurring, annual recurring revenue, pushing up our gross profit margin. We've spent significantly on sales and marketing over the last year, and in fact, over the last 6 months. So those areas we are focused on, but it is a consulting gig with that data analytics. We've looked at some M&A in that area, and the companies look great, but what if you don't get that consulting gig next year? But we know with ours, it's recurring, it's happening, We have around $7 million plus invested in these data centers. So
Got it. Now you brought up revenue, so let's talk about it, right? So many companies saw great growth in 2020, right? But then that growth kind of went down. You didn't see an increase whatsoever. However, for y'all on quarter one of 2022, you saw an increase in revenue, I believe approximately 236% year over year. What was the driving force behind that massive growth? And do you kind of see it accelerating and continuing for the rest of the year, at least till 2023?
Flagship has a great client base, not to go through names and all of that, but
Sure.
we have posted on our website. And so it's a very large software sale for one client, and another one, it was for equipment. It becomes lumpy. We need to move away from lumpy unless we are filling the sales funnel with major equipment sales and software. So you're going to get a lumpy situation, with that. And it was a great quarter. It doesn't, now the second quarter, if we don't have a very large sale, everybody's going to say, oh, look at Data Storage Corporation, what happened? But if you look at the annual recurring revenue, we entered 2022 with $12 million already committed. That's going to continue on statistically based on a renewal. So you'll get these lumpy sales. Do we like it? Yes. I mean, we'll take it. But the next quarter you can get, hit a little bit. And then it might third quarter or fourth quarter, something else very big comes in.
Yeah.
It's just tough to sleep at night if everybody's expecting us to have that same type of quarter with large sales like that.
Yeah, I mean, it'd be great if we could just copy and paste the same exact results. You'd continue growing like no other company. But since we were talking about numbers, since we're talking about growth, let's just quickly touch on the financial health of your company that the viewers should know about.
Sure. Well, our gross profit margin, continues to move according to, essentially according to if there's a large equipment sale. Equipment sales typically around 25%. Our subscription sales are typically around 50% margins, maybe slightly higher. So, that's essentially on the gross profit. We have probably $11-12 million cash in the bank today, and that's, we went from OTC to Nasdaq. Dr. Lebby, I hope that we get moved up to Russell as well, but I don't think we're there yet. When I look at our stock price, it's probably equal to our liquidation price. It's kind of insane what goes on, especially with our remaining contract values, with our annual recurring revenue. But we're healthy. From a balance sheet point of view, we have the ability to adjust our marketing programs without impacting our client expectations of the services we supply. But we're looking at certain economies of scale now to how do we improve our gross profit margin? How do we maybe shift a little bit on our sales and marketing program to more vertical? So we'll continue to hopefully grow revenue in the monthly recurring services. And I would say also, hopefully we continue to grow gross profit margins.
Now,
But, from a health point of view, yes. Health point of view, we're healthy now. Am I satisfied? Frankly, as you get to know my personality, I'm really never satisfied.
Well, hopefully you're satisfied with this interview. If not, you can always give us feedback. But you're leading the charge there as a chairman and CEO. But it's also important to have individuals that you can rely on. And from what I understand, you have a new VP of sales that came over from Flagship. How's that kind of transition been? And what can we expect of the positive impacts from that new appointed individual?
Tom Mitchell, great guy, ex-IBM, with Flagship for a long time, as one of the founders of Flagship. Tom was 18 years with, I believe, IBM, and we're entrusting him with the revenue budgets and the revenue acceleration of the company. We were missing it, frankly. Flagship has some great folks that are there. Everyone that I meet is excellent. We needed a VP of sales to be able to bring it together. Also, we needed to have more training going on across the subsidiaries to be able to do cross-selling as well. It was something that we tried back in June and July. It didn't go as fast as I would be happy with. Tom's really working with everyone to get cross-training going, sales leadership, hiring, and bringing that team together. So we're pretty excited about Tom.
Got it. Now, when it comes to, let's talk about anything that you're hoping to accomplish by the end of, let's say 12 months from now. Let's not even go to just the end of the year. 12 months from now, what are you hoping to accomplish as a chairman and CEO?
I think the management team, the leadership team, is coming together as a strong group. this is something that, in my opinion, in the first 6 months, the last year, we purchased ABC, and they were a gold partner of IBM back in 16, 17. That assimilation was a little difficult for a couple of years with systems. For Flagship, it becomes difficult too. We want the entrepreneurs that are running their business, but we also want folks coming together as a team. And that's one thing, is having a strong management team and bench planning on all these positions. I think we've accomplished that to where we are now. It's only getting stronger. I would say other things to accomplish is moving that gross profit margin closer to that 50% continual basis. And the only way to do that is more cross-training, selling, converting more of our clients. We want to be able to expand our channel partner program, not just the traditional, I would say, folks that sold the equipment, companies that sold the equipment, but the telcos and cable companies that are looking for more revenue, a more average revenue more revenue per existing client. We're hopefully to focus on vertical and more verticals in the area of healthcare and finance. Tom Kempster, who is part of ABC now, Tom's running GovNet. We're going after government sales, a large, very large user, if not the largest, for IBM systems. He's been responding to RFPs. We've been quoting government agencies. So we're busy, and we're going to continue to focus vertically, continue to focus on annual recurring revenue. We won't turn away big sales or big software sales or hardware, but that continual ramp to get us back to that 80-20 of monthly recurring revenue and equipment sales. We moved in the first quarter almost to 50-50.
When it comes to kind of growing, we've talked a lot about that, but I want to talk about challenges, right? You've seen the likes of Google and Apple talk about how they're slowing hiring because of the challenges up ahead. What challenges do you feel like you're going to face while you're trying to accomplish these milestones that you just talked about 12 months from now?
I think when you have an environment that's a sales environment, if someone's not producing, you put them on performance improvement program, you do your best to make sure they work out. So You're not really holding on to that. So, either people are productive or they're not productive on it. And Tom Mitchell knows those programs, and he's equipped to handle that. But we have an excellent sales team, and we need to increase the channel partners. I think the channel partners are going to become more aware that people want to preserve their companies, their clients want to preserve the cash and move to that pay-as-you-grow. Not that everybody's running to the cloud, which they are, but there's also now preserving capital. But I would say just growing distribution. And what happens is with the tech team, they're there. You try to get a couple of months ahead. It's very hard to find really good technical people. But you need to be able to match that with the services you're supplying. So if you're overloaded in that area, you can't wait for the customers to come on. You need to make changes. But we're not. I don't know how fat we are right now. We look at economies of scale. You can't make changes fast because it impacts the client base. So we are looking at everything that we can put together, utilize the people in the best way. So no fast moves. We're careful on it. But in a situation of sales, you're not holding on to sales and marketing programs that don't work. So I think we're kind of okay with that. We will make some changes over the next 2 months.
I've been in sales in the past, and I definitely know that being put on a sales performance plan is not something that anyone wants to be taking a part of. But hey, I want to kind of give you the floor again. I hope I was able to ask questions and give the viewers a better idea of your company. But Chuck, is there anything that you were hoping that you could let our viewers know about? Anything you wanted to talk about? The floor is yours to share with the listeners.
Overall, there's a migration going on right now for IBM Power Systems, AIX, and this movement to the cloud. We're prepared for that. Our experience and the number that occurs the most in billing when people are on cyber, DR, and infrastructure is an average of $3,000 a month, typically on 24 to 36-month terms. We're a very solid company. We're able to adjust our expenses given that we're trying programs that are very costly, and then we might back off of that. So, you have this lumpiness also in expenses on SG&A as well. So I would say the migration, it's all about execution. So keep an eye on us. This is really a little bit of a long play. You're not going to see this quick acceleration that's steady, but you will see that lumpiness. And we have a great team, great technical team, great sales folks, good leadership, and a strong senior management team. So I would say it's about execution, as we all know. So keep an eye on us and don't judge us by one quarter.
Yeah, hey, I mean, if you continue having acquisitions and performances like Flagship and the year over growth that you've seen, I'm sure it'll be a successful story for sure. But thank you so much. That is Chuck Piluso, Chairman and CEO of Data Storage Corporation. That is ticker DTST. Chuck, thank you once again. I hope you have a safe flight back to New York.
I'm the pilot, so hopefully it's safe.
There you go. Have a safe travel, sir. I tried. True story. I went and flew a plane. I think I was like $200 or something like that. I flew a plane. Of course, there was a co-pilot next to me. It wasn't just me. It's pretty cool flying a plane. I got a chance to kind of go over my own place, my own, old school and different things like that. Places I used to hang out as a child. It was a pretty good experience. I live in Atlanta, so going over Stone Mountain was a lot of fun as well. But enough about me. Let's kind of keep moving on. We have another great guest coming up with us, so I want to go ahead and take my time to go to introduce them. It's going to be Terence Yap, I believe, hopefully I pronounced it correctly. Terence, you can let me know if I didn't. I won't be offended. That's on me. But he is the chairman of Guardforce AI. How's it going?
Very well, thank you. Yes, you've got my name correct, Terence Yap.
Yes, nailed it. There you go. How you doing this morning?
Well, good. Thank you. Thank you very much. Well, it's 10 p.m. in Asia, but it's still working time for us.
It's 10 a.m. for me. It's 10 p.m. for you. So I appreciate you taking the time to hang out with us here today. And of course, before we get started, for the folks in the chat, the ticker is GFAI. Terence, it's great to meet you. We had a great conversation before when we were prepping for the call here. But can you just quickly give us an introduction on what it is that Guardforce does and what your main focus is as well?
Certainly. Guardforce AI has been around as a group for the past 40 years. We actually started in 1982. And so this year we're celebrating our 40th anniversary. We started off as a secure logistics business. We actually did a lot of the cash in transit business. So we are the largest cash in transit operator, foreign-owned operator in Thailand. We've got more than 21 branch offices in Thailand, secured armored vehicles. We have rights to carry firearms. So we facilitate the cash transactions in Thailand. But over the past few years, we actually started to transform the business because we felt that there's greater opportunities, especially within the security business. As we all know, the need for security has never changed since the beginning of time. It's just what to protect and how to protect that will continuously evolve with time and technology. And so, therefore, it is important for GFAI to also evolve. And so we're moving into robotics as a service. We're also moving into information security. These are all riding upon the fundamentals, infrastructure, on the foundations that we have built over the past 40 years. And so, therefore, we are truly an integrated security provider that is adopting and transforming the security solution services by using robotics and also information security. So we're moving towards the technology side of it. And the key part is for us to remain relevant to our clients because our clients are changing. Our clients' clients are also changing. The cost factors, the business models, the pandemic situation has essentially whacked the whole business model for a lot of people. And so it is important for a company like us and many others as well to continuously innovate in order to remain relevant to our clients. So that's what we're trying to do. We're trying to be relevant to our clients. We're trying to continue to focus within the security and the facility management, moving into technology.
Now, you brought up clients, and of course, you mentioned you're in Asia at the moment. Is it fair to say, because this is an assumption that I feel like a lot of folks have, on how since you're located in Asia, your clients are only Asian Pacific, and that's the only market you're kind of focused on? Is it right for folks to assume that? If not, tell us what is.
Absolutely not. That's the reason why we have actually grown quite a fair bit, because we feel that there's a market for robotics as a service. There's a growth in the need for automation. And the main reason is because labor costs has just gone up too quickly. The cost of providing a security guard, the cost of a cleaner, the cost of keeping the place safe, keeping the place healthy and hygienic and clean has gone up tremendously. And so therefore, a lot of clients are all scrambling to find a solution. And this is not only within Asia, it is also within the US market and Europe and the rest of the world. But we have got to be clear that we cannot immediately go to the whole entire world, because then it is just going to be overwhelming. So therefore, we are looking at the US market. We think the US market has this huge opportunity because of the labor cost structure. And of course, we also believe that there are a lot of great technologies that we can work together in the US. Bear in mind, the robotics solutions that we are rolling out, it's just like an equipment. It's like an IoT device. It's like a CCTV camera or a sensor. It's how we can integrate more technologies and applications into it that will ultimately increase the value and the intelligence. And so therefore, we are hoping to explore collaborations with US technology providers as well in order to enhance the applications and the value.
Got it. Now let's kind of talk a little bit more about, well, I know you got a video for us, which I want to take a look at here in a moment's time, not just yet, but tell me about any milestones you're hoping to achieve, right? As a company, let's say in the next 6 to 12 months, what's that kind of look like? What are some goals you have in mind that you want to achieve for your investors?
Certainly. One of the biggest, I guess, key strategic things that we have already indicated to our clients and also my internal management team is that we want to expand globally and within selective markets, and US is certainly an interesting market for us. We want our investors to continuously look at the way we expand from a geographical point of view, but also to start to track us in terms of the technology part of things, because we have indicated that we're transforming, utilizing our existing fundamentals to go into robotics, etc. So it will be interesting for us to report back and to share with our stakeholders the updates in terms of our partnerships, in terms of technology, in enhancing the robotic solutions, in the hope that one day this will create more value to our clients and therefore an incremental revenues for us as well. And I guess those are the key parts now, the robotics rollout and also the geographic expansion that we're looking at.
Now, is your key focus as you're trying to obtain these milestones, is your key focus right now to continue acquiring companies, or is the focus on something else? Because you don't want to acquire too many, kind of like you said, right? You don't want to try to do things too fast because that can kind of hurt you.
Yes. So this is a interesting part of it, and there are two ways that we're looking at. One, there's actually 4 different strategies that we're looking at. First of all, of course, is the international expansion. Second part is to maintain the best-in-class service for our clients, because over the past 40 years, that is what we have been doing. We are a service company. We are not a manufacturer or product sales guy. The only reason why our clients have been sticky with us is because we have been able to provide the best-in-class service. So best-in-class service is important. And of course, the third part is continuous innovation. And you touch upon an interesting part, acquisition. There will be certain circumstances whereby we may not do acquisitions. We may do partnerships. So it is both acquisitions, selective acquisitions, and partnerships. And the acquisitions, we will look at companies that have got an existing customer base, because ultimately we want to look at the way we can transform the way the target companies serve their clients. Because once again, they are also going through a change, a paradigm shift for their clients as well. So we want to look at potential acquisitions in the various markets that we're interested in, where companies have got clients that we can help to transform. For those companies that we're not looking at acquiring, maybe startup companies that have got technology that we can use, then we prefer to partnerships with them. And a case and example is a company in Hong Kong that we recently did, a Blue Pin, whereby they actually provide a contactless checking in, checking out solution for hospitality hotels. And as we know, hotels today are also transforming. A lot of the hotels are going to contactless checking in, reception. There's no reception anymore. And because of robotics, nobody's going to take leave. You don't have to worry about overtime, etc. And they're placed at strategic locations. So we are interested in partnerships as well. So it's not only acquisitions.
Now, there is a video playing. You and I may not be able to see it, but the viewers at home can through YouTube that you sent us. Can you tell us a little bit more about what we just saw in that minute video?
Well, it is an example of our robots in action. It shows how, I think the video itself is an example of the spray robot or a disinfectant robot that it can autonomously move around. And because of its height, it can actually have a wider area of spray disinfectant. So it's mainly targeted at facility management. It helps our clients who may be in the hotel schools, cinema, even hospitals, etc., to actually do a frequent and constant disinfecting of the area. And once again, this was in response to the pandemic situation, because once again, labor costs has gone up quite a fair bit. And so we're hoping to roll this out as a service concept. So it's similar to providing a guard, rather than selling equipment, we provide a service.
Now, educate me on this, because obviously COVID's such a big deal that we all dealt with. It was unfortunate that we had to deal with it. But do you feel like having that disinfectant spray and these type of robots is still going to be a big revenue growth moving forward as the pandemic is in the rearview mirror for us?
I think a couple of things that the pandemic has taught us, or has changed the way we live. We have gone on to be more conscious in terms of health and safety, etc. And so I don't think that will ever go back. The other thing that has changed permanently is the increase in labor costs. I don't think labor costs or salaries are going to go down. And clients will always continuously ask for cheaper service solutions. And then the third thing that's never going to change is the fact that once you've tasted automation, you're not going to go back. And so we will increasingly see automation in the workplace. We will increasingly see automation in the retail sector, etc., as the market becomes more educated, as governments and universities, research dumping more into the research and development of automation and robotics. We will see actually a greater emphasis on robotics and automation. We, as a service provider, we are happy with that, because that means that we have greater options. And once again, we are a service provider, and ultimately we're finding solutions for our clients.
I do see that your stock is up approximately, just today, it's up approximately 22%. The most recent headline that I see is your collaboration agreement with Hong Kong Industrial Artificial Intelligence or Robotics Center, FLAIR. Is there anything, talk to me about that collaboration. Let's just start there.
Well, it's one of our strategy, as I mentioned, about partnerships, creating an ecosystem around the robotics system that we have. And it's part of our effort and objective of working with governments and research institutes to identify new technologies that we can potentially add into our solution. It's one of our key pillars of continuous innovation. And that's part of it. We need to do that. And so we're happy to work with the FLAIR, which is a part of the Hong Kong government, to look into various opportunities. And I think they have more resources than us in terms of reaching out to great technology.
Well, now let's stick to the stock part of it. You've got, I believe, about almost 50%. I think it's about 48.7 level of insider shareholder value that you have currently. You comfortable with that number? And do you feel like it kind of accurately reflects the perception of the company overall? Because that's a pretty big number to me.
Yeah, so the insiders believe in the business. I think at this point in time, we prefer to, including myself, I prefer to own more stock. Unfortunately, there are certain windows of opportunity. But as we move along, there may be a requirement for us to readjust it. But at this point in time, I think we are comfortable with this position.
Yeah, it's always nice to see shareholders, or at least insiders, having that type of value, because you kind of believe in it, right? You kind of you're putting money where your mouth is, at least in my opinion there. Let's talk about any challenges that you're facing, right? Any obstacles, especially as the economy kind of slows down. What is something on the horizon where you're like, hey, we know this is going to be a challenge? And then how are you looking to place yourself to overcome those challenges?
Well, the biggest thing that keeps me awake at night, I guess, is really how we manage a growing business. We're not concerned about the actual business itself. We think that ultimately the market will be where it is. It's how we manage the growth and people involved, which I think is the most important. As we transform the business from a secure logistic business to a robotic business, there are certain challenges to it, because ultimately we're still going to a new business. So expect that from our perspective, we are going into this with the knowledge that there will be challenges. But I think it's important that as a team, working towards to solve all these issues together. whether it's integration, whether it's chasing the new next technology. And so therefore, we are taking the preemptive, I guess, actions of working with other people as well, partnerships, etc., in order to attempt to reduce that risk.
Now, I didn't get a chance to congratulate you on the 40 years, so congratulations on that. But let's also look a little bit ahead to the next, let's say 50 years. When you're celebrating 50 years, what is it? I know. I'm sorry. But when you're celebrating 50 years, 10 years from now, and you and I are having the same exact conversation, what are you hoping you would have achieved with your company?
Well, when we 50 years, I think the milestone that I'll be very proud of is that there'll be a next generation of leadership that will continue with the key pillars of continuous innovation, best-in-class solution, because those, I think, are the basic tenets of ensuring continuous sustainability of a business. And those principles, I hope, the next generation of management team and leadership will continue with that. Ultimately, and of course, over the next even 5 years, things may change with technology, but because we are continuously innovating, it will allow us to remain relevant. But the basic principle is that we will always be within, at least within my lifetime or my career in this group here, that we will always sleep and eat and dream security and facility management. It's just using what technology that we will adopt and use.
Yeah. Now, look, we definitely wish you the best of luck and hope to see that success as well. But having that type of success doesn't come cheap, right? You've got to invest in your product. You got to invest in people and services as well. What's the financial health of the company looking like?
Well, the fortunate thing for us is that we've got a stable core business for now, which is the secure logistics business. We are right now investing in the future. And in the future for us, we believe right at this point in time is robotics and information security. Of course, we're actually investing a lot more in the robotics business because we're trying to gain the market share and plant the flags. So in terms of that perspective, we are looking to invest more. And so therefore, there's a need for us to go and continuously look at, potentially looking at investing more in that area, whether it's setting up offices or buying new robotics or collaboration or with various parties part of it.
Do you see any challenges in achieving those things through the financial health at the moment? Or do you believe like, hey, we're good and we should be able to achieve what we want to with the financial health of the company?
Well, we are pretty confident in the ability for us to achieve those goals within the short, medium terms that we have here. Over the quarter, there are certain changes, but we should be looking at measuring a company on a year-to-year basis on that perspective. We do hope to change from a financial perspective. We do hope to look at the revenue changes, increase, etc. We have guided that we'll be increasing to about almost $50 million. That's based out on acquisitions. We are also looking at potentially changing the revenue mix from 90% of our revenues from secure logistics to potentially 40% to 60%, 40% from technology-related solutions. So those are the targets that we have set internally that we would like to achieve in order to support the transformation of the business.
Now, we talked about AI with Chuck earlier, so I want to talk to you. Do you feel that AI is going to continue to become a larger part of the security solutions market, or no?
Oh, absolutely. It's really coming into the cash in transit business, secure logistics, security. I believe will be a big adoption, mainly because of predictions, predicting if something is going to happen. Already in the past, we had security cameras whereby you can see that the thing is there and suddenly it's not there, or certain behaviors of people, the walking part of it, or certain anomalies. It sounds off certain alarms. Now, I think it's important because AI will help us to actually identify threats quicker in the hope that we can then respond to it more efficiently and effectively to these threats. And so therefore, I think AI is going to play an increasingly important role, especially within the security sector.
Now, we got a chance to talk. By the way, I definitely do agree on that AI part of thing. It'll be interesting to see how security is, how, payment services and all those things are in the future. But I want to kind of turn the floor over to you. If there were anything that you wanted to kind of talk about, any topics that you were hoping we could discuss here, the floor is kind of all yours to speak to our viewers at home.
Well, thank you. Well, I guess from our perspective, we'll be celebrating our 40th anniversary on the 27th of July. And that marks an important milestone for us because it's 40 years of service excellence to our clients. As I mentioned, our focus has always been in security and facility management. We are moving into other verticals through technology adoption. Majority of our revenues are recurring and highly sticky as well. We think there are significant growth opportunities within the technology sector. And we have a seasoned management team and a board of directors. So I believe we have the right team. This is the right time and the place and the right industry as well. So that's a very quick, short summary of where we are and what we're trying to do.
Yeah, no, I appreciate it. Thank you so much for hanging out with us. That is Terence Yap, chairman of Guardforce AI. Thank you once again. That is ticker GFAI. Stock is up 20+% today, and wish you many, many more successful days similar to that. Thank you so much, Terence, for hanging out with us.
Thank you.
All right, that's Terence once again. Let me go ahead and just kind of recap what we've had so far, right? One of the best things about All Access is the fact that we can go ahead and bring these publicly traded companies to you, the audience, the viewer, which I believe a lot of y'all are retail investors just like me. And it's kind of cool to have these conversations with executives who lead the way, right? Sometimes we want to kind of know, hey, how's the company really doing? The press release can say this, but you kind of want to hear it from the CEO and the leadership there itself. And that's why I kind of love doing these All Access, because you kind of really truly get to know what is going on at these companies. But I also, real quick, I believe we've got our next guest coming up here in a few moments. Let me go ahead and take a look and see how the markets are behaving. So maybe you and I can see how the markets are doing here today. But let me go ahead and share my screen actually with y'all. Let's go ahead and share our screen. Let me All right, there we go. You can see I was kind of taking a look at Apple yesterday before the close. Now, if you are a trader, and you know I love me some psychological numbers, you got to know that if I was trading today, obviously I'm not. 400 on the SPY has been a level that I've been looking to go short simply because of the psychological number. And that's been working out really well. If you did go ahead and take that short, let me know in the chat. Matter of fact, let me go ahead and put my focus here on the chat real quick. There we go. Put that there. Put that there. And by the way, we will continue All Access here momentarily. I just wanted to quickly review SPY. And of course, I wish Aaron was here with us so we could make fun of him a little bit, because Aaron went and took some long calls on the Snapchat when I went puts. But regardless, 400 psychological level on the SPY. Now you kind of wait and see. You can see SPY rejecting here off of VWAP as well. So if you're looking to go short, you can go short, but your risk off would be any crack above 399. Because if it goes above 399, you can go ahead and take your puts off, save yourself some money. Now be careful if you're going to play dailies, right? If you're going to play contracts that expire today, make sure your risk management is on point, because you don't want to just blow up your account because you went 25% in and then you lost 90% of it on this trade. But that's a trade that I would kind of keep an eye on if I was trading today. VWAP fade off of the 399 risk off level. Let me see if there are any tickers in the chat that people want to talk about. I'd be happy if, look, if GFAI went to $2 and you're an investor, and I believe they're currently around 33 cents or so, I mean, you would be one happy camper. No question about it. Just kind of looking at the chat here to see if there is anything else. Let's go ahead and take a look at Snapchat. I'm glad AB is not here because he might be a little upset, but you've got the 1050 bounce at the moment. I'm not going to lie. If I was trying to play Snapchat, I would wait for the $10 bounce personally. For me, is what I would wait at. But hey, there's one ticker that I actually just got an alert on right now, and that is TBLT. We got a chance to play this yesterday when it broke $5, and you can see you had a nice little run in the morning. We went ahead and played it. Now it's came back in today, and it gave you a chance. And there is high of day on TBLT. Did anyone in the chat go ahead and play this one? You had $6 break, came right back up, reclaimed it. Look, this is why it's so important to have your limit orders in, right? Because this spike up happened. By the time you try to sell a market order, you could have been out of luck. And now you're selling here at 630s instead of the 650s and 660s and whatever else, right? So make sure if you're trading here, you got to go ahead and have your break evens, buys and sells on this ticker. Just trying to take a look at any other tickers in the chat. Let me know. What Tesla is doing here today as well. All right, trying to break through that 842 level on Tesla. If you're looking to go long Tesla, I'd wait till it gets back down to VWAP here. Yeah, maybe around like 830s or so. See if you can kind of come back, give you the best risk reward. And then if you're wrong, I would say below this area here, let's say 825, you can go ahead and get out. So you're risking about $5 to the downside. And of course, if you're playing weeklies or dailies in that matter, you got to go ahead and be careful. What's going on? Awesome. Love it. Let me go ahead and get back to this. Give me one moment here. Appreciate that. Get some stuff ready on my end. Remove that. Well, enough of me talking charts. Let's go ahead and bring on our next guest, and that is going to be Andy Shape, who is the president and CEO of Stran. How's it going?
Good. How you doing? Thanks for having me on today.
Of course, of course. Thank you for joining us. Hopefully, you're not on the West Coast, right? I ask everybody this because I don't want you to wake up at like 7:30 doing this. You're not on the West Coast, are you?
No, I am not. I'm very far from there. I'm actually in Spain. So further.
So what time is that for you?
It's 4:30 p.m.
Okay, love it. Yeah, we just talked to Terence, who it was 10 o'clock at night for him out in Asia. So it's always lovely to talk to folks all around the world. But Andy, tell us a little bit, right, about your company and what is it that you do? And of course, the ticker for the folks at chat is STRN.
Sure. Yeah. We're Stran Promotional Solutions. We're a outsourced marketing provider that uses promotional advertising, branded merchandise to help our customers really market their brands, get exposure to consumers, and really accomplish their marketing goals through the use of physical merchandise, like, swag, anything like promotional merchandise, hats, pens, banners, even printed collateral.
Got it. Now, that's definitely something I use from time to time. Actually, I'm looking to use it here in a few weeks. But tell us about what kind of clients and companies that you kind of work with and you have partnerships with.
Sure. A lot of the customers we do are customers who really want to use this form of advertising as an effective medium. So mainly larger companies, Fortune 500. We have over 35 Fortune 500 companies that we're doing business with. A lot of household names like Coca-Cola, Molson Coors, TJ Maxx, and TJX companies.
Yeah.
A lot of companies like that. So, any larger company is really the companies that we use, using technology to help them, give them access to that merchandise, as well as coming up with the creative products for them to use.
Now, what's the competitor space looking like, especially with this? You obviously have great clients. You just talked about quality clients and names and companies there, but is it a competitive space?
It is. So there's actually almost 25,000 distributors in the country who do what we do. So there's a lot of them, and we're actually ranked in terms of revenue that just came out this week, number 34 in the country. So with our revenue as just over $40 million is ranking us in the number 34 in the nation, and we'll steadily climb that, and we're looking to grow, climb up on that ladder up to even higher on that in the next year or two.
Now, 34, that's an incredible ranking to be at. What is it about your company that you believe gives you an edge to be at that spot?
Sure. A lot of what we do is we consider ourselves program managers that use technology to our advantage to really offer our customers solutions to have access to that merchandise, combined with distribution, creativity, and an account team. We've got a great group of people with almost 100 employees currently. That just have been doing this a long time. And really, we have a great strategy of who we are and what we want to do. We're flexible, we're nimble, yet we're big enough to have all the buying power of anyone else in the industry. So we're really in a unique position.
Now, 34 out of 22,000, I believe, is what you said here. or excuse me, 34 is where you're ranked here. What's the game plan to kind of move up, right? Like, what are some things you're doing behind the scenes to make sure that hey, the next time you and I have a conversation, you're in the top 20, top 10. What's the move here?
Yeah, so there's really, we look at our growth trajectory. That's why we went public. We went public back in November to raise growth capital. We got to number 34 without outside money, and now we're using that money to really accelerate our growth even further. And the 5 steps we really look at is, first is getting more from our new customers, or from our existing customers. So expanding that with our sales team and our support team, creativity and technology offerings from them. The second one is acquiring new customers. And one of the things, we actually just came out with a press release where we're developing a new lead gen system where we're actually going on and promoting more Stran through SEO, through direct marketing, through more technology offerings, social media, just to really attract more eyeballs on Stran. The next one is offering more technology services to our customers. The final one is, or the one before acquisitions, is really offering more services like loyalty services or incentive services, as well as the promotional merchandise. And then the final biggest one is M&A, acquiring companies that really we can complement and really help grow, who have a successful base that we can do either geographically or offer additional services or capabilities that they may not have. So that's been a big part of what we do. And we announced a closing of about a $7.5 million acquisition of a company called Gap in January. And then we just announced one about 2 weeks ago in Houston, Texas, called Trend. Yep. And then both of those are really in line with what we said we're going to do and along our M&A strategy.
Yeah, and that's exactly where I wanted to go, because you acquired them. I'm talking about Trend here specifically. How does acquiring a company kind of fit into your growth strategy, right? And how do you plan on kind of integrating them into your ecosystem as well?
Sure. So there's, as I mentioned, there's 23,000 or over 23,000 distributors. So there's a lot of opportunity for acquisition, yet we're being very selective about who and why we're approaching them. So the first one is geographical location. So looking at someone like Trend, Houston's a huge market. They actually, I think, they've told me they have the most Fortune 500 headquarters than any other state or than any other city in the country. So it's a big market. So they already have a footprint there. One of the things that they need, though, is they need additional resources. They need additional management. They need more creativity, more marketing, more technology. And that's something that we can bring them. So take their base of it's not a huge acquisition. It's only $2.5 or $3 million annually that they've done. Yet we feel like we can use that as a base to really double, triple, quadruple that in the next few years easily, with using that as kind of the base of our Southwest expansion into the region. So really, it's applying management, applying resources, helping that team that's there right now to really expand even further and penetrate that market a lot further.
Now, all of these acquisitions you just mentioned too here in our conversation so far, obviously no one's just gifting it to you for Christmas, right? What's the financial health of the company in order for not just for you to acquire these companies, but then to also have a plan to go ahead and execute as well on all fronts?
Yeah, so typically we're executing these acquisitions as an asset purchase agreement, and usually we'll structure that as a little bit of cash up front, maybe a little bit of equity up front, but a lot of it's based on an earnout based on how successful the company is after our acquisition. So that reduces our risk, but also allows the seller to capitalize on the long-term benefits to them as long as it's growing. So really, we're structuring it that way that give them skin in the game, so that if the company's not healthy, and we don't notice that in our due diligence process, that we don't really have to pay as much as we would if it is a healthy company. Obviously, we want the company to be healthy. We want, when we do these acquisitions, we want the earnout to be as high as possible, because that means that we're doing even better. So, and then at the end of, say, 2 or 3 years, when the earnout is finished, all that money comes back into our shareholders' pockets. So it's a great strategy that we're looking at, and that's why we're being somewhat selective at it, because we don't want to find a turnaround. We're not really looking for turnarounds. We're not looking for unhealthy companies. We're looking for healthy companies that we can capitalize and grow.
You brought up shareholder value, so let's kind of dive into any catalyst that you believe shareholders can look forward to unlock the value there.
Sure. One of the things we recently did is we did a share buyback where we bought back some of our shares. We'll be disclosing the quantities in our next Q when we file that in August. So, but we did execute that buyback. So, we're really what we're trying to do is get the right investors that believe in the Stran story, that believe in us, believe in what we do, see the tremendous opportunity we have within this highly fragmented industry. I mean, the largest player is about 700 or 800 million, but they're private. We're really the only true public company that does promotional products on a majorly listed U.S. stock exchange. So there's really a scarcity value, and we think that there's a tremendous opportunity to capitalize on a $25 billion industry. That's what this industry is $25 billion. So if we can capture 5-10% of that, that's a massive growth story for us.
You're going to disclose some information later on, but let's talk about what you've already have. And I believe that's a 62.5 revenue increase that you announced in May to kick off the quarter. What led to that type of growth? And is that really sustainable for 2022, the 6 months that we've got remaining?
Yeah. So really what we've done is, again, why we went public is to accelerate our growth, to use that capital to hire additional resources, to hire management, to hold people accountable, to boost up our technology offerings. So we really are investing in that. And we do see that we announced in the last Q that our bookings, we had the highest bookings we'd ever had in history. So we are anticipating that to turn into increased sales as well. Whether we can sustain that type of growth throughout the year is yet to be seen, but we feel confident that we will see tremendous growth this year from a sales perspective. One of the things that we are looking at is really concentrating on top line revenue growth right now, because once we start to get over to 100 million, 150, 200 million is really when we can concentrate even further on making our profits even higher as well. So before we can do that, though, we really need to invest in the top line revenue to attract new customers, maximize our existing company customers, as well as continue to be aware of our profitability and try to be as profitable as possible. Yet we're in massive growth mode right now. So a lot of the pieces we're putting in place for infrastructure and team and people and technology really will follow shortly thereafter.
Now, when it comes to increasing revenue, that's great, but you also have to keep your expenses in line as well. And you can correct me if I'm wrong, but I believe in your earnings report in May, you talked about decreasing some expenses as well. Have you been able to do that? And if not, or how are you going to do that, either or?
Yeah, so what we're trying to really look at is decreasing expenses relative to revenue and gross profit are really the keys that we're looking at is reducing those expenses. So as we continue to grow, we may not reduce our overall expenses, but relative to the revenue and gross profit, it absolutely will. And that's where we'll really start to see, as we start to scale even further, we'll really start to see the growth or the net profit increase significantly and compound very quickly, because as we get that additional revenue, some of our fixed costs that we already have will not increase. They'll stay the same, yet our revenue and our gross profit increases. So that's really what we're looking at, is to compound that net profit in the next few years significantly.
Yeah, increasing those margins, it looks like, is what the focus is on ultimately. Now, let's talk a little bit about digital marketing solutions, right? And especially, do you feel like that's been a challenge for you to kind of adjust to? And if not, how is that going to be an opportunity for your company to grow here in the future?
Well, one of the things we look at, this is one of the only forms of advertising. When you get something physical that's a gift with a branded logo on it, it's one of the only forms of advertising that's not invasive. It's not taking from your time. For example, if you go to watch an ad, or you go to watch a video on YouTube, there's an ad. You go to watch television, there's advertising. Read a magazine, listen to the radio. It's very invasive. People are inundated with digital marketing from email, advertisements. So they're somewhat sick of that form of advertising. This, all of a sudden, they get something physical from someone. They have a favorable image of that brand, that they thought of me. They gave me something thoughtful that's useful that I can use. You can't replicate that digitally. So I feel that as things get even more crowded in that space, our form of advertising becomes even more effective, and people use it even more and recognize that it's very useful and very effective. And what we're here to do is help those companies that recognize that to use our tools that we've developed over 28 years to make it more effective than just putting it in the closet and saying, oh, hopefully we can hand these things out. It's more of using technology distribution, worldwide distribution, to have brand consistency and really report on that ROI that allows our customers to do that. So that's one of the things that we're excited about, is combining that digital presence, so that when somebody goes to your website or fills out a form, they follow up and use that physical advertising that we do to complement that, not replace it, but complement it, make it even more effective.
Now, I also do want to give you the floor in terms of, do you feel like there's anything that our viewers should know that we haven't really talked about today when it comes to your company and what to expect in the future?
I don't think there's anything that we haven't disclosed or talked about. I just think that there's such a tremendous opportunity within this industry. It's a $25 billion industry that's extremely fragmented. So I really see that there's a huge opportunity for us to go acquire companies, create a strong company that combines them all together, merges them, becomes a true player within the industry. So within the next few years, I think you'll see us to be multiple, hundreds of millions. We're hoping is what we're looking to see. That's our goal. That's what we're trying to do through the 5 steps that I talk about: organic growth combined with M&A. And really, I don't think it's anything that's that tricky. It's somewhat, we've been experts in this business for almost 30 years, and we're continuing to look at doing that and using public money to help us accelerate that even further. So it's exciting, and I'm just hoping that people recognize our story and see our results. And as we continue to put out favorable results, they see that we're delivering exactly what we said we would in our investor presentation and throughout all of our calls that we've had.
Looking forward to seeing how the acquisitions play out, especially 2 most recent ones, and kind of keeping those revenue growth with the expenses stable as well to help the profit margins. And that is Andy Shea, President and CEO of Stran Promotional Solutions, ticker STRN. Andy, thank you for having a conversation with us here today.
Great. Thanks a lot.
Take care. All right. It's when you pivot to like digital marketing, you've got to be agile with your business. And so far, it looks like they're doing that. It'll be interesting to see how the acquisitions work out. But let's move on to another great company that we've got here. I do want to invite Jim Kras, CEO of Edible Garden, to the conversation. Ticker EDBL. Did I pronounce your last name correctly?
You did. Thank you.
Nailed it. I'm like 2 for 2 today. I'm doing really well. How's it going?
It's great. How are you?
I am lovely. Love your background, by the way.
Oh, thanks. It's my living room.
Yeah. Well, I love the candles and all, the image that you've got going on there.
Oh, I appreciate it. You can thank my wife for that. She's in charge of the mantle.
Yeah, I mean, you can see my background, right? It's nothing great to really look at. So that's when I decorate things.
Looks like you've got quite a bit of storage.
Yeah. Office storage, it's all the same thing. But hey, Jim, let's dive right into it, man. What is Edible Garden? Give us a quick snippet.
Sure. Edible Garden is a very unique company. We are call it a future farming company now. We're very unique in regards that we are in the controlled environment agriculture space. And what that basically means is we utilize technology, greenhouses, vertical grows in order to supply major grocery store chains with fresh produce, primarily right now, herbs and lettuces. So with climate change, with sustainability, ESG, all of these type of initiatives that are out in the forefront, we capitalize that by providing food security, frankly, and product to major retailers. We've recently gone public back on May 5th on Nasdaq. And what we've been able to do over the last couple of years, we bought the business in 2020 from a parent company. It was private. We brought it public, but we've been able to grow our business because the consumer trend is not only that people want a product that is good for themselves, fresher, more nutrient dense, but also good for the planet. And because of the pandemic and other factors, we've seen some significant growth in the last couple of years, particularly.
Now, how does it work? Right? You talk about making sure it's nutritious, but how does it work in terms of planting the seed and then having that translate to me enjoying it on my dinner table? What's the process there look like?
Well, the process is actually pretty simplistic. I mean, greenhouse has been around for quite some time. How you grow more with less is sort of the trick. And a lot of that is being able to control the environment. So, we seed, let's say, herbs or lettuces, and then it's usually a 4 to 5 week grow cycle where it goes throughout our greenhouse and then gets picked, packed. It has to meet our specs, and then shipped or picked up in many cases in order to cut down on food miles from our facilities throughout the country. We have facilities that we own and we have facilities that we operate. We service the likes of Walmart and Meyer and Wakefern, which is ShopRite, and Hannaford, which is part of Ahold Delhaize, so all major players. And what we're most proud of is that we are able to not only grow product, but also be able to ship it at scale, where many of our competitors aren't able to do that because they just don't necessarily have the wherewithal yet. So, that process it's farming. It's controlled. It's not incredibly complicated, but it is. It's very specific as it relates to making sure that it's systematic, right? So we grow hydroponically, and we grow with some soil in our signature item, which is a 4-inch potted plant. So the way that we grow, it's not incredibly unique, but how we do it at the scale and with the efficiency and with the reduction of waste, and then how we are able to leverage that out in the stores, is kind of what makes us sort of, I guess, special. I hope I answered your question, but yeah,
you did.
It's not incredibly complicated, but it is. It's very, it's kind of like one part science, one part art, and one part parenting.
I love it. I love it. Now, look, I don't know about the folks at home in the chat, but sometimes I've got grapes in the fridge where if I don't eat them in a certain amount of time, it ends up being wasteful and ends up being a cost on my balance sheet, right? So with the process that you talked about, how do you kind of ensure that you don't have waste as much? Because then that's just hurting your bottom line, right? How do you protect against that?
Well, look, it's funny you bring that up because that's really kind of the genesis of what I think was how we separated ourselves from a lot of other companies. Look, I believe in all, that rising tides kind of raise all ships, right? Float all ships. I want everybody in the industry to do well. I think it's important. This is the future of how we're going to eat. We're going to have to control the environment because of what is going on in the environment. So shrink for us, as it's called in the industry, or the loss, is, it manifests itself in everything that we do as far as reducing wastes. Our tagline is zero waste inspired, which is, everything that we are striving for, whether it's, reduction in plastic or extended life of plants, makes us deliver on that mantra. And so, to address your question specifically, what we've been able to do is we've been able to get we've developed some patented technology that allows us to really optimize the supply chain in order to reduce waste, so that not only not only does the best product get out to market, but throughout the process, we're reducing cardboard use. We're using innovative type of materials that are like sugarcane based for some of our sleeves versus plastics. We use 90 to 95% less water than traditional farming. And when you think about the majority, or 60, 70% of all lettuce comes out of California, Salinas Valley to be specific, that's a good story to tell. The product that gets out into your refrigerator, just to focus in on that question, where we really excel is it's threefold. It's how we grow and bring the product out of the greenhouses, and how we pack it out, and how we handle it, and how we reduce food miles, because look, time is your biggest enemy, right? Time and temperature for the most part. So you make sure that controlled environment carries through the supply chain, that the trucks are not traveling huge distances and not going from Salinas, California to Boston or Chicago, and they're going an hour, 2 hours in most cases, from our facilities that are conveniently located near the DC, the distribution centers and major retailers. With that, we have a self-watering display that, for example, that allows us to extend the life of the plant, up to a week just by getting it watered. Those displays, we've got 250 of them in Meyer. We've watched our shrink numbers go from double digits on the floor down to single digits, just as a function of better looking product that, that is people want to buy. We thought we would have issues where we would be putting out product that was too nice and too, basically too good, and that we would, we wouldn't see the, necessarily the turns. It was just the opposite. People buy more when the product looks better and it lasts longer because we've cut the time from when it was picked to when it got to your refrigerator or to your shelf. One last piece, we use OTR bags, which is oxygen transfer rate bags for our herbs. Which extend the life, and this is and they're patented as well. It's somebody we license that out that allow us to extend the life of cut herbs, which is a convenient and popular way to cook by giving you another week, on that product. So everything that we do is about cutting time to store and making sure that the product shows up in the best shape and that you have a good experience with it. Because if you're going to go in there and which is kind of a commoditized market, you want to look for Edible Garden because you're going to get your value and that product's going to last long. So we have that combined with Green Thumb, which is the last point, which is our patented software that allows us to optimize the process that I spoke about, our picking, packing, routing, and demand planning. So that we throw less out and we hit our mark based on the orders that come in from the major retailers.
Now, you recently went ahead and had your IPO, obviously, right?
That we did. Yes.
Congratulations on that.
You. Exciting.
It really is. How are you planning to use that money through that to impact the future of Edible Garden?
We've been very good stewards of the money. If you look at our background and how this business came to be, we really bootstrapped the business through the pandemic. We're very fortunate to have, doubled our sales roughly in about, 18 months. And so for us, this cap raise is huge because what it does is it allows us to continue to take what is a pretty well-oiled machine and efficient and allow us to vertically integrate to improve our margins. I mean, this is traditionally a relatively low margin business. So, margin expansion is key for us. Bolstering technology, making sure that we, like I said, vertically integrate and own versus contract grow the majority of our products, even though I think that hybrid model has served us well because there's some real excellent growers out there in the greenhouse business that can really give us the capacity that we need. And that flex capacity has made us very nimble to be able to deal with a little bit of the seasonality of the business and grow the business in regions where for us to build a facility might take a couple years. A lot of what we're doing is looking to, once again, this whole idea of zero waste inspired is to take that capital and deploy it by maybe taking greenhouses that just need to get up to Edible Garden's specs and refurbishing them and reusing them, replenishing them, recycling them, that whole idea versus just building a brand new $30 million, greenhouse when I can, turn around and find something out there that's maybe not ready for prime time, but get it there with a lot less CapEx and it'll do right by everybody and save on resources while give us the state of the art, kind of call it retro mod that you would like. So that's kind of how we're looking at the capital right now. We've paid down a lot of bills as well. So, we're in pretty good shape financially to get to task here.
Yeah, well, look, man, I'll send you a couple of my bills if you want to pay those down.
Yeah,
as well.
That's all right. No, that's all right.
You went ahead and talked about how it can be a low margin business, which is only the very own reason to make sure that shrinkage is controlled as well. But let's kind of pivot that to how your recent partnership with, I believe, Nutricom has kind of played into the partnership, or how it could benefit you in the future as well to make sure that you continue to maintain those margins that you set out as goals.
So for us, Nutricom's a very special relationship. I knew them. My previous life was a brand manager for a company called Nature's Bounty. I knew them. I ran the sports nutrition part of their business for a bunch of years after they had acquired it from a company back in the 2000s. Big brands like Metrex and Pure Protein and Body Fortress, all protein brands. All big brands, a few $100 million worth of business for Nature's Bounty. Nutricom was one of our developers of new products. When I ran Metrex, I knew of them. There's a lot of press that's even come out in the last few days about alternative proteins. We know about obviously the Impossible Burgers. And those type of call it meatless finished goods. Really what we're looking to do is harness the power of the plant, tap into the relationship with Nutricom. We already have some vegan proteins out in the market, some kind of legacy businesses that we had prior to buying the business that we kind of rolled in. What we really want to do is come out with the next generation of proteins, whether they're proteins that are protein shakes, whether they're protein supplements, whether they're protein ingredients, all of which we want to look to harness what we're doing with plants, how we grow its sustainability, how we leverage the greenhouses, and have those come out in these next generation proteins. And like I said, there's a lot of investment going into alternative proteins because of the fact that they are so much more sustainable because of how much you're reducing CO2 just as a function of using plants versus animals. And it's actually a huge impact on the environment. And I think you're going to see a lot of investment going there. And, yes, we want to continue to, be able to, have the wherewithal to go after these ambitious, projects. But, we're looking at it now as like, how do we best give ourselves an assortment out there, work with best in class businesses that can bring innovation as well as R&D. Like I said, Nutricom's I think they're a 30-year-old business, and they were started by a PhD that helped develop proteins early on. But margin expansion for us as well. These are products that play to our sweet spot, but allow us to take a great name like Edible Garden that's known for fresh and take a living and bring it, kind of this idea from greenhouse to grocer. And kind of encapsulated in almost what we call farm to formula, which is this, these next generation, like I said, whether it's supplementation or even food products that, that are protein based by leveraging, the items that we grow, whether it's basil, rosemary, they all have therapeutic benefits. So it's a combination of nutrition, and it's going to be driven on taste, quality, and I think branding, and people looking for a leader like Edible Garden who's going to bring these type of products to you that are better for you and taste great. So that is somewhat of in the infancy stage, but I think you'll see some pretty great things over the next 6 to 12 months as we start to roll out some of these innovations.
Now, am I right to assume that the unfortunate events that are, with the Ukraine, the Russia war, and different things like that, is that impacting your business at all?
Yeah, unfortunately or fortunately, depending how you look at it, for the better. Look, I mean, food security is national security. And so we're growing everything within hours. We're manufacturing stateside. I mean, we have some issues with shipments of products that, more packaging than anything else is really the issue for us. But we've been able to work around that. So yeah. It's been a real positive for us. I don't like saying that because war is not good. And I don't like what's going on with the environment. I mean, we're really focused on sustainability. We try to treat our business in an ethical manner. War is not good. The impact on the environment, the supply chain, is stressed because of it. I think you'll continue to see that. But because of the way that we built the business, organically. And that's another thing, just to shift gears.
Please.
Everything we do in our New Jersey flagship facility is USDA certified organic. So, point being is, we conduct ourselves in a very stateside, organic, certified manner. So we're pretty tight. We got one of the tightest supply chains out there. And so we're not too reliant on overseas, and I don't see that changing. So, growth for us is really good and strong. It's unfortunate that those kind of things happen, but we're just uniquely positioned to capitalize on it.
Yeah, of course. And, we play different roles and different hats, right? One is as a human being, of course, for you. Another lens that you wear is as a CEO itself as well. And, the pandemic, as sad as it was, some businesses happen to be in a position to make a positive out of that. So I understand your point.
Yeah, look, people cook more at home now, not only because of the pandemic, but now because of the recession.
Right.
Or the recession that we think we're not going into, but who knows, right? The reality is things are more expensive, and that's making people cook at home and go out less and save their money, and which means they're buying what I like to call the flavor maker, which is herbs and lettuces and whatnot to make ordinary dishes taste better, and we see an impact with the type of growth that we have.
Yeah. Well, look, I've got an air fryer in the kitchen that I haven't opened in 2 months. So maybe I'll start cooking at home as well. But Jim, it's been a pleasure talking to you, man. Again, that is Jim Kras, CEO of Edible Garden, ticker EDBL. Jim, I look forward to many more conversations in the future.
I appreciate your time. Thank you very much.
Take care.
All right.
One day I will use my air fryer and put it to good use and get the dust off. But let's move on to our next guest, and that's going to be Grant Barra, Senior Vice President, and along with him is going to be Ezra Beyman, Chairman and CEO of Reliance Global Group. How's it going, gentlemen?
Very well.
Thank you so much for joining us. I don't often get to interview two individuals from the company, so I'm really excited for this one. Should be fun. But Ezra, I'll kind of start with you if you'd like to tell us what it is that your company does.
Okay, so mostly and generally till recently, we've acquired several insurance agencies. I think it was about 8 or 9 acquisitions in the last few years. Those are fine. They're operating. They're cash positive, mainly in both the health insurance sector and some P&C as well. And for the last year and a half or so, we've began the technology for 5-minute insure, which we've spoken about, we've announced about. And that's pretty savvy technology that actually allows customers to go get quotes and home and auto insurance. And within 5 minutes, actually buy the insurance within 5 minutes.
Wow.
There are other sites similar that, like for captives, Allstate, the Allstate Farm, that you could go and buy. You could buy State Farm or Allstate, etc. But here to get an option from Barry's and actually buy it, that's somewhat unique. But now, and that's why Grant Barra is joining us on the call, we've graduated to the next level, which extremely, both from a business risk perspective, cost effectiveness, scalability, and efficiency. We've now taken the technology that we've done, the 5-minute insure, and adding that to the meaning with agents. We acquired Grant Barra's business, was known as Barra and Associates, April 23rd, I think it was, if I remember correctly. And that we're now harnessing together with 5-minute insure it's a powerhouse. It's actually taking the technology, enabling agents who already have the customer relationships to be able to quote, do business with us. And this, as a business model, is also phenomenal. It's extremely scalable. When we bought the business, it had about 60, 63, 64 agents. Now in 3 months, we're up to 80 something. The goal is way beyond that. We've said that in our announcements. It's exponential. So, we think, God willing, it's a extremely scalable business. The technology and the infrastructure, and Grant will talk a little about that himself, that they have in place, lets us go from 60 to 600 agents without spending crazy amounts of marketing, with almost zero marketing cost, which is where many of the on-site insurance companies are having problems now. In order to attract, well, we've been part of 300 and something million people, you got to spend a lot of money. Our marketing costs are almost negligible, really very slight. And the model works. We only pay the agents when they're producing the business, and they're all excited. You'll soon be able, we already, I think we mentioned it, you'll soon be able to see actually testimonials from existing agents. And if people can already go to our website, RELIexchange.com. That's what we've renamed it from Barra to RELIexchange.com. And actually that was Grant's idea, the exchange. So it's very exciting. The numbers are playing out. It works, and we look forward to very significant growth in this area. I think it is important to say, though, for the shareholders and share buyers out there, that I personally put $5 million into this business. In my private world, we're very large. We owned about $3 billion worth of real estate, third largest mortgage brokerage in the U.S. residential. So we've been, done big things in the past, and we're very looking forward to this eclipsing anything we've done to date.
Love it. And that's definitely some great insight you gave us. Grant, let's go to you. The acquisition, I mean, look, I've heard of the term pay as you go. Before we had a CEO who mentioned pay as you grow. That's what it sounds like we're dealing with the agents. But Grant, how are we going to go ahead and get this company to the next level? And what role are you hoping you and your partners are going to play in that as well, especially without the challenges or the challenge that you will end up facing eventually as well?
Right. So that's a great question. When we went through the acquisition process, we weren't just looking for a buyer of the organization. We had a clear understanding of the technology that was needed in order to have a proprietary software suite that would allow agents, to be attracted to a service that would make it easier for them to do business with the end consumer. So what we found in RGG, Reliance Global Group, is they have a software platform that was absolutely phenomenal. It was direct to consumer though. So direct to consumer, it works, it's phenomenal. One of the issues I see with direct to consumer, and our major competitors in the marketplace are doing the same, is the cost to acquire clients, right? I mean, you can do it organically, but you're never going to scale. But the cost to acquire clients is significant. It's cost prohibitive. And it's all done on a basis where people are bidding for ad space online, right? So as more and more of these companies come to market, and I'm telling you, there's more coming to market, you hear them talking about how the cost to acquire clients are going to come down. I think it's completely opposite. Cost to acquire clients based on supply and demand, basic fundamentals, is going to go through the roof. So you have to have a way that we can control the cost of the end client in a way that is manageable. So we've been able to look at it, and we took the idea that, we have a manageable way, but it's actually better than manageable. It's instantly profitable, right? So we're profitable on every client acquisition based on our model. What we did was we removed the direct to consumer. Well, we didn't remove it. That is 5-minute insure. So direct to consumer doesn't have anything to do with RELI Exchange. RELI Exchange is distribution through our agency partners and agents in the field. So there has to be massive benefit to them. We have an entire InsurTech suite, right, that makes it easier for them to do business with the end client and gives them a competitive advantage. They look like a $10 million agency day one that they contract with us. The value that the agents and agencies provide an organization like ours is their ability to find a prospect. So as they find prospects and run it through the system, you're offering competitive options approximately 9 out of 10 times against where their current carrier is. Makes it easier for them to close business. As that business comes in, they're paid a percentage of the compensation up front on the new business. They're also paid a percentage on all residual business. It makes it instantly profitable for RGG. Right. So it's instant profit as we scale. There's no one else in the marketplace that's offering InsurTech suite like this, access to these insurance companies, and also back office support. There's no one here that currently competes with our model. Our closest competitor is charging multiple tens of thousands of dollars to even get on their platform, right? So we've removed that barrier to entry, And I mean, the floodgates are open. So we're planning to be in about 47 states by the end of this year, which, would be phenomenal.
Now, 47 states by the end of the year, Ezra, that sounds, well, well, real quick, Grant, how many states are you in currently?
So our model is focused in on attracting agents and agency partners in Illinois and Northwest Indiana primarily. So we operated in Illinois, Indiana, and also Iowa. We have had tremendous success doing that. What we realized through the pandemic is it's going to be what we thought was going to be more costly to expand throughout the United States because you're placing pods, like office pods throughout the United States. It wasn't needed. So we're able to do that virtually. And the technology that's started with 5-Minute Insure, right? And we rolled over to work and develop it into an agency distribution platform just makes scaling extremely simple, and it keeps our costs minimal. Like, it really doesn't cost us much at all to add people to the platform.
Right.
So that's why we want to benefit when our producers, our agency partners and agents in the field benefit. So when they succeed, we succeed. It's really a no-brainer for all parties.
So do I have, go ahead, Ezra.
I'm sorry, I just wanted to answer your question.
Please.
We are licensed in 47 states. So
Right.
the platform is there, and we have carriers in much of that area. So that's part of the platform. And I think, Grant, if you want to talk about the exciting white label system that we've put into place, that's been getting tremendous response.
So the platform in itself is absolutely amazing. So what you find is, like, when people want to start an agency in the field, they're stuck with really going to a captive organization, right? A captive organization like for example, those state farms, the Allstates, the Farmers, anybody like that that's captive. That's one company. And while I think those companies are very good, right? They're very good companies. They deliver on their promises to their policyholders. It is far from the best option for any agent or agency partner to enter into, right? If someone's joining one of those organizations, it would be my opinion that they haven't done their research, or they haven't done proper research on what they should be doing. You go to an independent model like ours, first off, you are already accessing many, many insurance carriers. That's what gives you the competitive advantage. Now, the platform in itself is white labeled. So it can be John Doe's insurance agency. They provide the logo, the entire platform, the colors adapt to whatever that logo is. I mean, literally, as you go to the RELI Exchange site, and we're putting up the videos to show what the platform looks like and how it can be used, it looks like someone's signing on with us day one as a $10 million agency. I mean, they look like a major player in the industry, when in reality, it's an individual, right? Quality professional in the insurance industry that's working out of their home on their laptop, right? The platform is the face. It's the new office. Like, people do not see each other face to face in the same way that they did several years ago.
Of course.
And if you don't have a nice office, and that office has to function and also have all the key components behind it to make it operate, we have all those, and we can remove that barrier to entry and give people significantly more opportunity to build their agency than ever before. And what I would say to end clients is, I mean, you're crazy to go anywhere else. You should be working with one of our agency partners. They're going to do all the work for you, and you're going to get the best options. So that's where you're at.
Now, I think it was I think it might have been about 12 years ago. My family had an insurance, brick and mortar type situation. And I know that they would push certain policies because the perks were a little better, the commissions were a little better, but obviously taking care of the client themselves first and foremost. It sounds to me like the benefit and the perk of individuals and companies going with you guys, you mentioned a few times, is the barrier of entry. Is that right?
For the agents to join with us, the barrier to entry is huge.
Yeah.
Even going, so typically what people do, someone wanting to get into this industry, they don't know exactly how this industry works. So you think you got to go to one of those major captive organizations.
Yeah.
Next thing you know, you're signing an office lease for 2, 4, 6 years. So you have that. You're required to have 2 office staff. I mean, you're in $100, $200, sometimes $300,000 a year in expenses before you're even making any money.
Yeah.
We need to be able to remove those, and we want to make it easier to do business. And because what we do, right, is so competitive in the marketplace, price matters, relationship matters, price also matters. So we need to be able to provide substantial value to the agency partners, which in return are able to provide substantial value to the end consumer. You mentioned, do some carriers pay more than other carriers or give you perks? 100% they do. But the way we've set up the platform is that's not taken into consideration when making an offering. In my opinion, that's short-term thinking. We do not want to place anyone somewhere for a perk, a short-term perk that an insurance company is getting. We want to lay the foundation with, bricks and mortar. This is not a house of cards.
Yeah.
So we lay that foundation. They're with us for significantly longer, the stats show, which means the lifetime value of that client is greater, and they're benefiting from it.
Now, you talked about, I know, Ezra, you went ahead and talked about the 47 states that you guys have licensed partners in and all that other good stuff. But let's say end of year, or let's just say even 12 months. As you grow, what do you have any expectations or guidance in terms of what you're looking for your revenue to be, especially if your margins in terms of expenses aren't as they're kind of minimal, I believe is what you said, Ezra, at the beginning. So what are you expecting your revenue growth to be, Ezra, at the end of the year and also 12 months from today?
So is that something I'm allowed to say if we haven't disclosed that publicly?
That'd be up to you, but if you haven't disclosed it publicly, then I mean, it's up to you if you want to.
I'm not sure if I'm not sure if I'm allowed to, but I will say.
Well, let's not do that. But when do you believe you will be able to disclose such guidance? Because I don't want to get into tricky waters.
I think by we will go back our quarter of everyone's quarter will be reported August 15th for Q2. And we do expect, actually, it's obvious that they don't have to be a rocket scientist to know that we should have growth because that was announced. We did the acquisition of Barra during that quarter. We also did Medigap, which was announced, which we did not have a full quarter Q1. So obviously, no one has to be a big genius to know that revenue should be bigger because of these acquisitions.
Right.
But the goals, and I've already discussed with Grant, I could see his eyes bulging. We've already discussed what I'm looking for Q2, for Q3, Q4, and for the end of next year. It's where we really believe, and we did say this on our announcement. This is important, I think. Combining the technology and the platform and this unique combination of tech and human.
Yeah.
We do believe we could be the largest. It's not really franchise, but franchise type organization in insurance in the country. We really believe that. We could see now the numbers are really growing. It's very receptive. Like Grant said, the barrier of entry for all these other companies are very expensive and people are getting burnt. We're making it very easy to get in. And the model that we have is unique. We don't know of any other model in the country like this. Yeah. So we do plan to, it's very significant. And I could say this, that just do the arithmetic, the revenue are in tens and tens and tens of millions.
Yeah, and I'm glad we were careful.
We already actually, our own company already has, because of the other agencies, already close to 20 million in revenue annually. But this is going to be, whatever we've done till now was just kid stuff, just getting started.
I love it. Yeah, look, I'm all about being careful because I don't want to get fired before lunch. But I will say this, you could definitely work with Zoltan. If you now you mentioned you believe that one day you will be Ezra, the largest franchise like in your space. Any idea when you're hoping to achieve that by? Now look, I know it's not sand in the line or line in the sand or anything like that, but like when are you hoping to achieve that? Is it 5 years from now? Is it 10 years from now?
Way less than that. Way less than that.
Way less than 5-10 years.
Way less than 5, yes.
How you feel about that, Grant? You see any challenges that might come into that? It's great having two of you, by the way, because I get to kind of piggyback off of both of you and just kind of pin it a little bit.
I will say in the opportunity of working with Ezra, he has a great business mind. So I absolutely love it. With what he said, I agree 100%. First off, nobody is currently doing this in the marketplace. Like, I have searched and searched, and nobody is doing this in the marketplace. It is literally the best offering with a barrier to entry that is way lower than anyone else. As far as growth goes, I believe we're going to blow this absolutely out of the water. I think it is going to be very difficult to screw this up.
What would have to go wrong, do you think, Grant? Now, be careful what you say. Now, Ezra has this on live video. But what do you think? What do you think is going to stop if it's such a great product with such a great software with such a great business model as well? What do you think can go wrong? And then I'm going to follow up and give you a heads up on how are you prepared to deal with those challenges as well.
So the only challenge that I see right now is adding additional leadership within the organization. Now, we've been able to overcome that. And what I've seen over the last several months is it's become significantly easier to hire in those roles. Yeah. So the challenge that I previously saw, I think, has really, just based on the market conditions, nothing necessarily that we've done has allowed us to onboard everyone that we've needed in order to support the growth of the agency force. So again, that's being the single biggest issue. Could that be an issue in the future? I don't see it being an issue in the future. And what we're doing when we actually get into what it is we're doing, and we have quality people in our industry considering making a change to us, it's an absolute no-brainer. And they're very excited. They want to be a part of this. So what we have is super attractive. Again, it's not a question of if, it's a question of how long. I can't accurately predict that today on this call, but it's going to be hard not to make this work.
Ezra was hoping you would say by the end of the month. Let's be honest here, right? But one thing, we had plenty of conversations about the advantages of your company, what you're hoping to do. But Grant, I'll start with you, and then Ezra, I'll ping pong it to you in a moment. Grant, is there anything that you were hoping that the viewers at home would know about? Any opportunity I didn't give you in terms of topics you wanted to discuss? The floor is kind of yours before I pass it to Ezra on what our viewers should know about your company.
So this is going to be something that I already hit on, but it's a really, really big deal. InsurTech is a major buzzword in our industry, and you're going to find there's companies flooding the markets trying to get in and be techie and get these huge valuations. The issue that every one of them, I believe, are running into as people do their research is the cost to acquire clients is astronomical. It's astronomical. Like, you want to pay for a click on Google for auto insurance, $75, $150, sometimes $250 for a click where they might not even put information in on a page. Like, that is crazy expensive. Yeah. When that person's probably only generating $200 in commissions to the organization. How many years would that one person have to be there? And how many people had to click that button in order to get one person's information through where they actually bound a policy? You have to control the cost to acquire clients. We've done that in a proven model that's been proven in our industry for over 100 years through all the captives. What we did is we took technology and packed it on top of that. So we packed it on top of that. We control the cost to acquire clients. Every single one of them is profitable up front and on renewals. Our agents are benefiting. We packed the InsurTech technology on top of it. Nobody else has this ease of doing business. Nobody has the offering, the white labeled offering, where they're their own insurance company. They're not a RELI Exchange agent. Hey, I'm an agent with RELI Exchange. I am my own agent in my agency. They happen to be operating on the RELI Exchange platform. That's really behind the scenes. We win. Our profit is very good. Our margins are incredible. And the profit to the agents themselves is also incredible. And the benefit to the end clients is very, very good as well. So when all parties win, again, it's going to be very difficult not to succeed.
I love it. Ezra, I mean, Grant pretty much has me wanting to hit the buy button here, but what do you have to add on here?
The truth is, I think this I could say, that if anyone does the homework, looks at our filings, looks at the acquisitions, look at our numbers, our margins, and where the stock is now. It does not take a rocket science. It's probably the best buy in the century. In fact, I think I'm allowed to say if I was able to buy now, I would be. It's just this quarter you can't. I'm in the blackout period.
I was gonna say you've got 5 million already in the works from what I remember. This has been a great conversation.
I would gladly add more if I wasn't restricted by law.
We need to get you in touch with Zoltan so we can get some stuff cooked up legally. But hey, it's been a pleasure, Grant, Ezra. It's been an absolute great conversation. And again, the ticker for Reliance Global Group is RELI. Again, pleasure, and I'm sure we will have a conversation with you soon after.
Thank you very much.
Take care. Thank you. That was fun. That was great. I mean, yeah, look, Grant pretty much, definitely a company that I want to try to do some more homework on. But definitely has me excited for what the future is. And of course, I don't want to say I've been in the insurance industry, but my family has. So it's interesting to kind of get some conversations going about that as well. I'm going to go ahead and bring in my friend who may not be my friend after he went ahead and lost all that money in Snapchat. Can I bring you up, AB? You want to give me a thumbs up, buddy? There you go. There you go.
Wait, hold on.
How's it look?
Sorry, wrong camera angle there.
We've got like 7 different cameras right now, but what's up, man? How your calls looking?
Well, so for those who weren't watching Benzinga Live yesterday, yes. I was content just hanging out, not making any more trades from the week. I'd gotten beaten up. Zunaid pushed me to make a call on Snap. So I said, hey, look, I bought puts on Netflix, got burned on those. Yeah. Got puts on Tesla, got burned on those. Fool me once, shame on you. Fool me twice, shame on me. I was not going to get fooled again. So I bought calls on Snap. I did get fooled again. So that's an 0 for 3, 2 puts in a call on the earnings, went 0 for 3. I did you a favor, Zunaid. I knew no matter what I picked, if you picked the other way, it was going to go in your favor.
Well, that's why I come on your show and I was like, hey, AB, what are you doing? So I can go the other way. And, I just want to thank you for this. I don't know if I'm allowed to do this, but I'm going to do it because it's okay. I want to thank you for having the proper call of letting me get the puts when you got the calls. Cause that's people there today.
No, and I think if we roll back, the tape from yesterday, I even said that was what was going to happen. I knew it, but I would say, okay, I like to, I like to put my friends on, and I'll show you. So the one silver lining, and as I was fully accepting my account just being completely blown up today, I did have a few.
Wait, did you put in more money?
No. Because I had like $600 left in it.
I remember.
You said I okay. So I spent 510 on the Snap calls. As you can see, those are done. So I still had like about 120 left or something.
Yeah.
Bought some Q puts that expire on Monday.
Okay.
So those are up right now. Look, those are up $50. So the account's not blown up yet. Monday will be telling. It'll be telling if we have an account or not. And if anyone's watching us here for the first time and they're like, oh my God, this guy's just the biggest idiot. Yeah. I just want you to know this is my Robinhood YOLO account.
It's not your Roth IRA.
It's not my Roth IRA. It's not my big portfolio. My big portfolio is fine. Zunaid, why don't I give you a little break here? I know you're going to come back on in a few minutes. I'm just going to run through some of the biggest headlines of the day, what's going on in the market.
It's cool. I'll hang out. I know I was gonna give you the space, but I'm good. I'll hang out with you, especially because I want to hear your stocks. And look, 400, by the way, that psychological number. Wait, on the Qs?
On the SPY, yeah, we were looking at the Qs. Sorry. So let's start with the SPYs. Like Zunaid said, we're getting close to that 400 level. We're on a daily chart right now. Let's zoom in on a 5-minute chart, see some of that intraday action. So here's the thing. From an overall market standpoint, right, you got to realize where we are right now. Let's go back to the daily and zoom out. We are still about, if you go up to our all-time highs on the SPY, we are at about, 480, and we're still below 400 here. So we're still drawn down a lot, but we've come back off these lows on June 16th. We've risen about 8% since then. But what a lot of professionals and analysts out there, which, look, analysts are like weathermen. they're wrong all the time. They're right sometimes. You know, you just got to take it with a grain of salt. But there are a lot of big banks out there, whether you're looking at Bank of America, Goldman Sachs, that are still a little bit bearish. And here's why. So up here is really when the Fed started its shift into a more hawkish, saying we're going to start raising rates. We're really going to try to tackle inflation. And in that time, from January to now, we've seen the multiples of companies just get absolutely crushed. But we haven't seen the full effect of an earnings crush yet. So this is when, in a down cycle, basically companies across the board, not every single company, but companies across the board, so something like the majority of the S&P 500 companies in previous bear markets will start lowering their guidance and start, sometimes even missing some of these earnings. So a lot of these bankers and analysts are expecting the market to keep dipping as we get through these earnings season.
Yeah.
And for people that are long-term investors who may be worried about that, the good news is that these cycles just play out in finance, right? You get to those downtrodden markets when you get those earnings crushes, companies are lowering guidance. And then right when the bar gets so low and all the sentiment is bearish, that's when the markets start to turn around again, because then the companies will start, we down guided for 3 quarters in a row. Now we're looking okay again. And then the market will take off. So I'm not saying that's what's going to happen here. That's why a lot of banks right now are still bearish despite this little rally we've got in the past 2 weeks, just because they foresee that earnings crush following the multiple crush of these valuations, and seeing them come down. So that's from a macro perspective. Zunaid, what do you think about that?
Well, I like what you're saying. I want to kind of filter it in, and I promise I'm not rubbing in your face, but go ahead and pull up Snapchat real quick, right? And I promise I'm not rubbing your face, but Snapchat, you can see that it's down 38%. Now go ahead and pull up a stock like, let's say, Pinch. Wait,
I had calls. Is that good that it's down 38%?
If you flip your monitor, it might be. It might be. But you go ahead and pull up Pinterest. Yeah, PINS. And you can see that stock is down 12, 13%. They haven't reported anything, but it's kind of like the relationship between social media sites, right? You see Google's down as well. I'm sure Facebook probably isn't having a good day itself. Oh, there you go. Or, excuse me, Meta. I'm sorry.
Thank you.
Sorry. Don't report me to Jason. Meta platforms.
No, I was gonna report you straight to Zuck.
Wow. Yeah. I can't have that. Report me to the SEC rather than Zuck. But what my point is, kind of like taking what you said and, hey, you have majority of the companies in the S&P 500 reporting negative earnings and the stocks plummeting. You kind of see a sector possibly doing that. Now, these are all just assuming that, oh, hey, since Snapchat failed, this part of the business may not do as well either. And you can kind of see it taking a little bit of toll on the other industries when it's related to social media companies. But it'll be interesting, man. I don't know. I think you have next week. I know I sent a list to Alyssa about the companies that are reporting next week. If you give me a second, I can try to pull it up.
There's some big ones. Apple.
Microsoft. Yep. Let me see here. I've got the list right here. You've got Ford reporting as well, UPS. So, like, what I'm trying to say is different leaders in different sectors are reporting next week. And that's what could really set the tone for at least the third quarter and how stocks are going to perform, in my opinion.
Yeah. And while we're talking about individual stocks, let's talk about exactly what was in this Snapchat report. So the companies had a lot of issues. And you can see from the chart here, I mean, we were up at $80. Part of the reason that I bought calls, in addition to getting burned on the previous 2 puts, was looking at this and just feeling like maybe Snapchat's a little ahead in terms of, because it's already been so beaten down, the bar's been lowered. Maybe they get a surprise. But, we saw that with Snapchat a couple quarters ago, where Facebook reported before Snapchat did, Meta. Meta reported before Snapchat did. And that was, I think, Meta's first like terrible earnings report that dropped it like 30%, and Snapchat was down like 30% the next day. And then Snapchat reported that very next day and was up 50% after hours because that bar was lowered. So you got to realize, with something like this, Google, Meta, like, they're moving this much because they haven't reported yet. So they only have Snapchat to go off of, which Snapchat talked about a number of things. They talked about just an overall slowdown in ad sales, which is what is hitting Google and Meta, because ad sales are the biggest part of the business for these three companies. And because Snapchat's ad sales were down, the idea is that, okay, we can assume that Facebook's and Google's, or sorry, Meta's and Google's will be as well. The other thing that that Snapchat cited was increased competition. So I think they're basically saying TikTok there without saying TikTok. You know, I know like Instagram Reels and YouTube Shorts and everything. So
are you a Snapchat user?
I have a Snapchat.
When's the last time you opened the app?
Like this morning.
Okay, got it.
But I don't use it nearly as frequently as I used to.
I would love. Okay, here's the thing. I've got Snapchat on my phone. I think the last time I opened Snapchat might have been 6 months ago, maybe, right? Because nobody's sending me snaps. I'm not sending anybody snaps. But TikTok last night, right? I mean, unfortunately, that's my bedtime story, if you will. It doesn't help with the blue light and all, but that's a different problem of mine. But what I'm saying is I feel like more and more users are using TikTok and using it for a longer period of time than Snapchat. Perfect example. I don't use Snapchat. I use TikTok. You use both, but you use TikTok possibly more than Snapchat. Because look, when you do content for Benzinga, where are you putting it on more often? TikTok or Snapchat?
Well, we haven't gotten on Snapchat. If anyone's got a contact out there at Snapchat that can get us on that little Discover page.
But look, if Jason says you got $1,000 budget and we need to increase one of the two platforms, which one are you choosing, TikTok or Snapchat?
Oh, TikTok. I mean, well, there's so
where
much
do you
more
think, where do you think the advertisers are going?
Growth opportunity. Yeah, 100%. 100%, man. I mean, and think about it. Like a kid, a 16-year-old kid can only spend so much time on his or her phone throughout the day on different apps. And now you do have other, you know, things popping up that people are using. What about Be Real? Are you on Be Real, Zunaid?
What is that?
Oh, man.
We're on live air. Don't forget. But what is that?
Be Real. It's like the new hot social. If it makes you feel any better, I said I'm not downloading that. I'm 25. I have like 5 different social media apps on my phone already. I do not need another one. I refuse to buy into a new social media here, but Be Real is picking up. So I'm just saying, if a kid on his phone's got TikTok, Snapchat, Instagram, Be Real, Twitter, it's like how much you know, like market share can Snapchat really grab?
Yeah, I'm looking at my app usage, and I have used this week, don't judge me, people, 2 hours and 41 minutes worth of TikTok this week is what I've watched.
Oh, dude.
It really makes me want to reconsider my life. But hang on. I have used my clock app more than I have used Snapchat. I've used my clock app for 4
Not
minutes.
even the alarm? Or no, that is the alarm app.
That is the alarm. So I've set more alarms than I've seen on Snapchat is my point there. But I will say this, and I'm going to go charge my Fitbit here in a second before I talk to Mr. Mueller. I will say this. You saw Facebook go ahead and report, take a dive. Snapchat went up. Snapchat now reported first. You see Facebook taking a dive. Are you, my friend, with the $100 that you have left in your account, buying calls on Facebook before earnings?
Well, all right. So first of all, I wouldn't say I have $100 left in my account. I have 2 QQQ puts. So whatever those are worth on Monday, I can't even sell them today if I wanted to.
Because you don't have
I don't have PDT. I can't sell them today if I wanted to. So on Monday, ask me then. Oh my God, Zunaid, look at this.
Is it to the downside? Oh man.
Wait, hold on. Let me pull up the Qs chart and then I'll pull up my.
I love that I have to like pivot to being all professional here in a moment. This isn't helping.
I know. I'm sorry. By the way, is
oh my goodness,
5-minute chart on the Qs. If you guys are day trading out there and watching the Qs, just watch these levels.
Yeah.
Watch these levels down here at 300. If we break through here, I mean, geez, this is some ugliness right here.
Dude, pull up the SPY. That 400 rejection was just beautiful. And it was in the morning too. It was within the first 5 minutes, I believe.
Yeah.
Look at that. 400.
By the way,
it went up by maybe 21 cents.
Is charging your Fitbit some sort of euphemism for something?
No, it really isn't. It's because after I get done with like shows where I'm sitting on my behind, I like to go walk around and like, you know, get my steps in, and my Fitbit has dead. Okay, you ain't got to full screen it, but my Fitbit is dead. So I go charge it so that when I'm back on, I can go get my steps in. I don't appreciate you trying to put me on the spot though. I'll be back.
I was curious. I didn't know. All right, guys, let me know in the chat if you've got any tickers you want to check out. We're just going to be running through some other top headlines of the day for the next 5 minutes before Mr. Zunaid gets back to continue the all access. So we talked about Snapchat and how that is dragging down other tech stocks. One thing I've been watching today that has shown some strength is the XLE. This is your Spider Select sector fund for energy. So basically, I think oil and gas energy overall. And so, I was watching this actually pre-market. Let me see if I can find. So if you look here, sorry, that was yesterday. Here's pre-market. We were red pre-market on XLE, but since then, since about 7:30 this morning, just been ripping higher. I think investors out there are looking for something that might be just wait, you were that fast charging your Fitbit?
Yeah, what do you think? What do you think? I live in a mansion? I just went to the next room.
I thought you were gonna go plug it in and watch it charge.
No, I've got an interview here in 30 seconds. I need you to hurry up with whatever you're doing.
I was talking about energy. I was talking about XLE.
Go ahead. You got 30 seconds, and I'm removing you mid-sentence.
All right. Your actual, like your Chevrons, your XOMs, pretty flat, but a little bit down today. Gas prices, from what we can see, are still dropping. So that is good news for customers out there at the pump. But basically, these energy stocks have gotten absolutely clobbered the past 2 weeks or so as tech.
He thought I was kidding. It is 11:40. It's time for AB to get out the way. Don't come back, AB. He's done. He's going to grab his lunch. But anyway, let's go ahead and let me remove his. There you go. Thank you. Thank you, producer. Anyway, moving on. We wanted to go ahead and end it off with a bang. So now we've got Ingo Mueller. Hopefully I pronounced that one correct. Who is the CEO of AgriFORCE Growing Systems, ticker AGRI. How's it going?
I'm well, thank you. How are you?
I am good. Hopefully you enjoyed our shenanigans there for a moment.
I sure did.
It's a pleasure having you. For the folks that may not know at home, could you tell us a little bit more about what it is that AgriFORCE does?
Yeah, we're agriculture technology company that's really focused on transforming agriculture with a view to really advancing solutions focused around sustainability and plant nutrition, which plant can be, of course, floriculture or food-based. So it's really using the latest innovations and focusing on intellectual property to drive change. So if it's our view in a commoditized industry that you need to focus on both know-how and then intellectual property, because at the end of the day, that's how you drive value for shareholders.
Love it. Now let's talk a little bit more about the world of ag tech, if we can. So most investors may not be very knowledgeable, and I would love to learn a little bit more as well about the innovations that are currently happening at the our agricultural space as well. Can you tell us a little bit about the state of ag tech at the moment and how you believe your company is best positioned to take advantage of the growth in the future?
Well, what we're starting to see, of course, is the impact of climate change around the way that we grow food. And the fact is that consumers are demanding that food is brought closer to them. Yeah. That means traditional field agriculture, although still prevalent, needs to change. And so people are looking at different forms of what we call controlled environment agriculture to deliver food closer to consumers. And that's either sort of traditional greenhouse growing or vertical farming that we're starting to see more of. And within each of those are different iterations of technologies that drive efficiencies and outcomes. So you have many components involved in that process, from lighting to automation, to climate control. And each and every one of those can be different depending on what you're growing.
What are some challenges that you believe your company will face? Not necessarily the space, but your company as you try to obtain and that growth as well.
Well, we see a really robust future ahead. I mean, there's tremendous demand for controlled environment agriculture solutions, and there's really a lack of know-how in the market. Farmers don't really understand that technology that well, nor do investors that are really driving this change. So there's really a need for somebody to bring it all together and really optimize it around both plant genetics, plant health, and then actual production processes themselves. And that's where we're really focused.
And how are you planning on, especially when you talked about the farmers, how is that process going to work to make sure they're educated on the best ways to optimize the business as well?
Well, we recently announced an acquisition of a company called Delphi. It's in process, so I can't get into too much detail, but it's considered arguably the foremost agricultural consultancy in the world, 200 consultants, global operations, or do projects globally, offices in about 12 countries. So there's a tremendous know-how there that can be deployed to help people understand both plant physiology, so to speak, but also optimized ways to introduce new technology that suits the needs of the farmer or the investor.
Got it. Now, on your website, it states that you're the solution to allow crops to reach their full genetic potential. What does that mean, and how does your technology achieve that?
So there's various elements of technology, but specifically, we designed something called a grow house, which we consider sort of the next generation of greenhouse. And it uses unique materials, which we believe really impact plant health. One is a transparent material, which allows virtually the full light spectrum through it and virtually all of the UV light. And UV light is incredibly important in plants expressing themselves. That's genetically expressing themselves. That's the thing that causes your colors, your flavors, and your plant growth. So those two in combination are extremely important. And then it's really about conditioning the environment in a way that plants actually are in that optimal temperature zone at all times. Those are just some of the elements beyond sort of the actual seed and or clone that you're using for a particular crop.
When it comes to, I actually want to go back and refer to your website here, because you talked a little bit about technology, you talked about the crops as well. But I believe you went ahead and one of the things that your company talks about is having automation and AI be a part of the 4 pillars. Before I ask you to expand on that, what are the other 2 pillars?
We have fertigation, micropropagation, as 2 other very important components in the process. So we believe it all begins sort of at the earliest stage of the plant and then moves through the process to where you can produce it with as little human intervention as possible.
And from that note of human intervention, let's talk about automation and AI, which I mentioned was 2 of the 4 pillars based on what your website said. How is the role of AI going to continue playing a big part of being a big part of the reason that your company is going to be successful, right? Like, what role is AI going to play for the future growth of your company?
Well, you're seeing AI introduced into all sorts of farming practices, sensor technology, the way fertilizers are deployed, water is deployed. So it's smart farming, but in order to introduce smart farming, it's not about necessarily collecting the data, it's knowing how to use that data to automate outcomes. And that's why Delphi to us is so valuable, because without that knowledge of how plants react in certain environments and in certain climates, it's really hard for AI to be effective as a tool. So it's really about integrating that knowledge into practice and everything we do, whether simple outdoor farming or highly automated indoor farming.
Any challenges you see as you're trying to have AI play a role in your business as well?
Well, it's really just the massive amount of data that needs to be incorporated into that practice, that knowledge that needs to be brought into what could be multiple applications, whether it's fruit orchards, whether it's field farming, whether it's leafy green production in vertical houses. There's a lot of data sets and data points, and Delphi has something called QMS, which acts as a platform for these different modules and applications. So the company's actively working to build those out, and it's really about just executing around that.
As you know, I remember being in college and people really started to care about recycling around me, and now it's kind of like a huge conversation. Everyone, as I believe they should, starting to care more about Mother Nature and Mother Earth. How is your company making sure that as you're growing and as you're having your business model change, how is Mother Earth being taken care of, and from a sustainable standpoint of ESG and whatnot?
Yeah, it's really about the processes we're adopting, whether it's on our solutions side of the business, where we're looking at ways to optimize the way we operate. So using less energy, using less water, and taking advantage of the sun, for example. And on our other side of the business, the brand side, which we really haven't talked about, it's introducing intellectual property around processes that really give food its full nutritional value and potential. So all of those, we believe, are key critical to keeping our promise to our consumers and customers that we will offer more sustainable solutions to them.
Now, I'm going to use a quick example, and hopefully I can tie it back into the question I have. So many times when I go to the store, you see a bottle of water that costs $1.50, but a same ounce, 20 ounce Coke costs $1. AKA, it seems like, hey, at least to the consumer, it costs more to be healthier and things like that. So as you're pursuing these environmentally friendly changes, does it impact your margins more though? Like, does it cost you more and hurt your bottom line as you're trying to be responsible to the climate and earth?
I think what we're seeing now is consumers understand there's a cost to this, and typically are prepared to pay more. So you have consumers that are willing to pay more, but at the same time, you're also trying to use technology to drive down costs because there's a quid pro quo there that exists. Right. So it's a balance. Obviously, in some instances, you can't pass all the costs along, but our job is to optimize, to use that knowledge to figure out how we can do that really smartly. So we're delivering more value to consumers and we're creating robust margins for ourselves.
Now, I know you've got acquisition in place. You can't speak too much about it, which of course we totally respect, but let's talk about the financial health of your company as well. Let's assume that the acquisition goes well and everything goes smoothly. What will the balance sheet look like for your company, especially if you're planning on achieving these milestones for years to come?
Well, we've recently done a financing, a convertible note financing that really allows us to close on our first acquisition. We have another acquisition in process behind that, DeRusse, which is a tissue culture business, biofarm tissue culture, very exciting, very robust. And that will be a combination of debt because it does have significant revenue and EBITDA, and then equity as required. We're coming now to the point where we're shelf eligible, so we'll be able to take advantage of that situation. We've been blessed to have a very liquid stock in a lot of investor interest. Right. And we think as we start to deliver on our various businesses, that our audience is going to like what they see, and that liquidity will drive our ability to finance efficiently or effectively.
Now, as a leader, I know your answer may be different, but as a human being, you see more interest in your stock from retail investors, retail traders. Does that impact your business decisions in any way at all? Or is it just, hey, this is cool, but let's exit out and move on with life?
Yeah, our focus is really long-term. I mean, we set as a senior team, we set a 5-year plan. We have certain objectives. For example, one of our objectives is to end this year having acquired $100 million in top line revenue with a 10 to 15% EBITDA margin, and to do the same thing next year.
You said 100 million? Sorry, I'm just taking notes here.
Yeah, 100 million top line revenue. And I think I feel pretty confident we're going to get there, and as does the team, both this year and next year. So when we set those goals, we really have to stay focused on them and avoid some of the distractions of the vagaries of the market, so to speak. So, we try not to look at our stock price. We try, of course, we have to be aware of what's going on, right. But trying to time stuff against, key critical business objectives, to me, is a fool's game. So we're just focused on delivering on what we set out to do, and making sure that in doing so, the value is there for the shareholders, and then hopefully the share price should take care of itself.
Yeah, I mean, the famous saying is time in the market is better than timing the market itself, right? So long-term horizon, long-term thinking is definitely great. Now, is it Delphi that you're in the process of completing that acquisition with?
Both Delphi, right? And then a company called DeRusse out of Belgium.
Okay, that's what I had thought. So once you complete these acquisitions, let's stick to Delphi in this case. Once that acquisition completes, how is that going to be beneficial to your company? Like, what are some more value that you're going to be able to unlock there?
Yeah, so what we see over time as we start to acquire businesses, that know-how to us is massively valuable, both in understanding the opportunities in the market, but as we acquire businesses, and I'll use a very specific example, DeRusse. Sure. DeRusse has over 2 million square feet of greenhouse operations in the US, in China, in Europe. And so if you can go in there and deliver that expertise to create more efficiencies in what they do, that 1 to 5% improvement creates a lot of value for us. And so we also can then apply other learnings to improve outcomes for whatever plants it is that DeRusse is looking to produce. So it's that type of value that we see in Delphi, both within our own acquisitions, but of course to third-party clients. And we see North America being an incredibly fertile market for Delphi services. It's unbelievably so. They are not in North America. They're almost everywhere else. But so we see a tremendous opportunity to introduce Delphi to the North American market.
Perfect. And that's the benefit from there. That's what I was looking for there as well. Now, 100 million is the goal for the end of the year in terms of top line revenue. Are you able to tell us where the company is currently approximately towards that goal?
Well, I can't, again, because of the forward-looking issues that I have. But what I would encourage your listeners to do is to look at our news releases when we announce those agreements. And that has some color around the financials of both of those businesses. And we see not only adding to that, but we also see those businesses also growing quite robustly. So.
Got it. Now, I understand that, you know, because of laws and things like that, there may not be certain situations or certain things you may be able to talk about, but are there any catalysts that our listeners and potential investors can look forward to when it comes to your company?
Well, again, I have to be very careful, but I can tell you we're very focused on M&A.
Okay.
And I spoke to sort of what we have as an internal target. But I think what is really exciting for us as a team is on our brand side, what we called our Mana IP acquisition. And again, your listeners can go back and look at that acquisition. We're now at the point where we hope or intend to commercialize that, start to introduce it to consumers this year still. And we find that exciting, as well as our RCS licensing deal we did. We're also looking to start to introduce that commercially this year as well. So we'll see both M&A revenue growth, and we'll also see organic revenue growth from the other side of our business. And I think through that, you'll see a lot of catalysts around those two activities.
Yeah. And of course, you know, my job here is not to trip you up, of course, but it's just to provide our listeners with just as much information that they may not have known otherwise, right? Because like talking to the CEO and the leader is also a lot easier to get the information that our possible investors may need. Now, so many times individuals, investors, short sellers, whoever they may be, have a misconception of what a company is and a misunderstanding. Do you feel like there is something like that with AgriFORCE? And if so, what is it do you believe that people misunderstand about what it is that your company does and what it is doing and will do?
Yeah, I think sometimes perhaps our business model is quite aggressive and very comprehensive. And so I think people sometimes get a little lost in what we're really trying to do and achieve. And we say our purpose is to transform farm, food, and family every day, everywhere. It's really as simple as finding ways to deliver solutions more sustainably and provide more nutritious food and better or more robust plants. Because, you know, as I think everybody understands, plants are really the substance of humanity, right? And they're used in pharma, they're used in nutraceuticals, they're obviously, they feed us. So everything that we do is focused around that promise.
Now, you know, we still have a couple of minutes here. And is there we talked about a lot of things, which I love, but is there anything that I missed out on that you were hoping that our viewers at home got a chance to hear from you yourself? Any topics you want to discuss? The floor is kind of yours.
No, I think, you know, maybe the one overarching thing is opportunity. The world is changing. We see the fires in Europe. We see the droughts in America. We need to change. And there are no clear leaders in this space who are trying to do what we're doing. There are companies that are doing little bits, but nobody's really trying to bring it all together. And that really excites me. I mean, we're talking about $1 trillion addressable market across the whole food system alone. And if we can get it right, I think we can build an incredibly successful business.
Got it. Love it. Thank you so much for your time. It's greatly appreciated. That is Ingo. Did I pronounce it correctly? Is it Ingo?
You did. Ingo,
Perfect.
like bingo, no B. Very easy.
I wish I would have told that before, but Ingo Mueller, CEO of AgriFORCE Growing Systems. That ticker is AGRI. Thank you so much for hanging out with us. And I've got written down 100 million top line at the end of the year. I'm sure we'll have a conversation.
Just to be so we're clear,
Pro
because
forma.
of
Got
timing,
it.
right? Yeah. So,
and of course, we look to talk to you whenever those acquisitions are done and see what the future of the company looks like over at AgriFORCE. Thank you so much.
Perfect. Thank you.
All right. Well, that was fun. It's always great. Look, I've said it again, call me a broken record, but it's always great to talk to CEO, chairmen, and leaders of the company and get information straight from them. I want to say like straight from the horse's mouth, but I feel like that's a little disrespectful to the people we're talking to. So straight from the leaders is what I'm going to stick with there. But we appreciate all of you for hanging out with us here today. And of course, this is All Access. We do this just about every Friday. We'll do more of these. We try to focus on different sectors, especially based on what's going on in the world, whether there's government bills that are being passed that are relevant to what's happening that week, that quarter. So we'll bring you All Access once again. But we appreciate you, the viewers, the audience, the people that we do this for hanging out with us here today. And of course, I do want to give a big thank you to our producers as well, producer AT, Chelsea, who's been helping us out, Michael Murray, and of course, Aiden. The man does all the research here to help us out with questions and getting some insights on these companies so we can have a deeper look at it for y'all. So thank you to all those individuals and all the men and women behind the scenes that help make this possible. And we hope to see you next time on All Access.